Oh, yep, it's working. Right. How do I get this thing? Where's the link? Where's the link? There it is. Okay. Right. Who we got on here? Got a couple of people. It's really hot where I am. Got a big glass of ice water. Aircon on full bore. Okay. Couple of people. Sometimes this thing takes a while to update, so start spamming the chat if you're there. Hello. All right, I can see someone. Right. What are we going to look at? Just throw any questions. Just throw any questions in the chat anytime. Let's have a bit of a look at how these closes closed, and we'll have a bit of a look at what comes tomorrow. And okay, so this is good. Okay, just okay, really. It's still under trend. It's still both range trend and normal trends. So it's got a bit of work to do if it wants to kind of get out of there. But we got an engulfment. We got back up above the range trend from back here. So kind of positive. If they really wanted to just send this thing down, they just wouldn't have snuck back up above there, or they would have made the wick on the top of that candle much longer when it closed, which would just instantly put it under the trend again and send it down. So it's not too bad. It's kind of looking at this is sort of like looking at the bottom of things, because if we just skip all the way to the top, all right, there you go, 3-month support level. So we should be seeing Sol get stronger. Like now that it's hit this, it shouldn't be a little weak crappy coin anymore. It should be doesn't mean it goes to the moon or anything. It's still a ratio to BTC, so BTC has to go up for Sol to go up, but it should definitely have strength. Okay. Safety assets, well, they did the opposite, which is kind of what you want to see. So engulf to the downside, open on the wrong side of trend. It's kind of just on the trend, but it's close enough. The wick of the candle was on the underside of the trend, so fingers crossed that just keeps pushing down a bit. Totals. Yeah, so this is... Yep, so nice steep trend, candles on the correct side of it, closed above that horizontal support, so it's probably going to push up minimum to here. Cool thing is that these aren't hard closed candles, so this this stuff at the top is not technically closed as resistance yet. So if the push continues, if it just keeps on working its way up, then it'd be that point right there. About 3.24 would be rejection. Hard closed range trend from this candle, not yesterday but the day before. So that would be the place to watch. In fact, it would be worth putting an alert on that. So let's do that. Get so many alerts actually. Sometimes it's good to have little messages on them, like ones you actually understand, like oh damn. first resistance. All right. What else we got? So this is going to be the end of the week, but it's the kind of thing that is going to make or break, what comes next for the overall market cap for risk assets. Because right now, what it is it started from up above this, which is basically your support, and this is a dive. So this is, if you ever heard me talk about liquidity dives or trend dives or that kind of thing, that is what this is. So it starts from a place of support, pushes straight through it, and it can't actually break the support because it started on everything. So the only way for this to actually break support is to just keep the price down here, or in this case, the total value down here. Open up the next one, reject off the backside of this, and then from that point, it would have to then have another week which closes blue. If that happens, every single thing up there is now resistance, and that's kind of game over. Apart from the fact, our life will go on and we'll just do a lot more shorting than we will do longing. And otherwise, what will happen is it will just grind up, and there might be pullbacks and all that kind of stuff, but overall, it will just be grinding up to get back up to the top there before the close of the week. So that's what that means. Okay. Yeah, same thing here. Now that's obviously a much longer time frame, but that's a monthly break level. It's hard closed, so it should be support. This will just continue to grind up, or it has to stay down here for 24 days. If they're, generally speaking, if they're going to actually break a monthly level, they don't do it at the start of the month, because it's about having to continually apply sell pressure for 24 days from here just to keep this thing down here. And in theory, if they were going to dump it, they would have sold all their assets up here. So what have they got left to sell? So it seems more like it's a dive for liquidity. Okay. Let's see, so yeah, so let's bounce it off. Yeah, so I wasn't too sure about this 161 level. I mentioned that a while back, because I know this might sound like tin hat, but everything on here is somehow follows a plan. And I don't think that October 10 wick was meant to be part of that plan. And there's sort of some justification to that in what's happening over here. So these two levels, so this one here, which is the one that's bouncing off, and the one underneath it that was created back here, these are legit, real support levels and created through all this stuff, normal stuff. Now, this October 10 wick, in theory, made this one into one, but then, nah, it just kind of just dipped back through it today like it wasn't even there. So it looks like it's gone back down to the 59.55 support, and it's probably just going to push up and try to break the range trend again. So seeing a little bit of a move up now. So how you sort of trade this kind of stuff is when the day opens between support and resistance, it's got to go one way first. So it's, in this case, it went down, so we had a little pullback at the start of the day, and that tapped that support, and now it's going to go try find some resistance, which is getting pretty close. So it should be up there, which is just, there's a little bit of 100x leverage sitting up there, so that seems to be where it's pushing into. And it's going to try to get above the range trend, and the range trend rejected yesterday, but what and it's a bit early in the day to be doing this, unfortunately, but um, it's really got to get above that range trend, stay above that range trend, and actually be above it tomorrow, uh, so that it can then close and then come back down and test it as support, and until we get a blue candle closure between or anywhere down here, none of this is technically resistance. So the 168 level up there should be pretty achievable if it just keeps moving up, because it was hard closed by this candle here, but yeah, and I wouldn't call that the strongest level. I mean, it had proper rejections there, but yeah, it doesn't look like it's the absolute strongest level. Yeah, okay. We have 3-day close. So the 3-day just in the middle of nowhere. So you might. So if it pushes up to the daily range trend, because it is quite early in the day, it might then reject off the daily range trend, come down to the 3-day support, which is down here at about 157, and then push up to the 3-day range trend again. Something along those lines. So kind of like a small move and then a bit of expansion and then a bigger move. The other option, of course, is it pushes all the way up to this and then unfortunately could come back down. So yeah, welcome. And of course that one, which is that closed today, is just in the middle of nowhere. So this, we got 155 down here and 181 up there. So that's probably about the biggest range that we got right now. So these are all the closes from yesterday rather than the ones we just had. So there's this. So this is moved back up enough that it's opened above the trend. So it's going to try and push up here into the 180s. Most of the stuff's actually pretty bullish. It's just it's really just deciding on BTC whether it goes and takes that lower liquidity, because it's the only thing that can really make this dive down again. You know, because being a 28-day target or 28-day time frame, it can dip. You know, but like you see here, candle went down below the trend and ended up coming back up and bouncing off the trend and then coming back up. This whole thing is a dive effectively, so it's yeah. But that is trying to go here. So and that same thing, trying to come up here. So most of these are in the 180s. That's 194. Just trying to come up here. That's a problem. So this could be the one that then triggers the next drop. So it might travel from this range trend into this hold and then roll over and maybe try to push back down to the 120s. So that could be like if Sol is sitting in the 170s and then BTC starts to show signs of weakness or rolling over, that's the kind of thing you'd expect to happen. That would maybe take over and push it down. And this is just a time bomb waiting to happen. This time frame. It's so like right now we are basically on borrowed time. We're just we're doing what we've done here, continuously pushing up from under these really high time frame trends. And then as you get towards the end of the time frame, which in this case is 77 days, it's usually trying to pull back down. So something I thought I would do today is actually try to figure out if there's any kind of way of telling. So if we say, oops, so how long was that up for before it came down? How long was that up for before it came down? How long was that up for before it came down? And how long was that up for before it came down? This is the question. This is what we want to figure out. So all we want, let's just put a trend through there. And then let's turn off everything else. Don't really need that. Don't need that. One time I sat there just continuously clicking the yellow line that is the current price and pressing delete, trying to figure out why I couldn't get the line to go away. I was very tired that day. That was quite early. Gee, where did that trend start? Okay, we need one more line. We need this line. Because close, open, that's the first time. Can anyone spot any obvious pattern? It's about 18 days in. That's about 18 days in. It never went up. Well, it kind of did, but it's about 50 days in. About the same. 30, 25. I don't know really what that tells us. So all we know is that we can do this. And somewhere before the next line, it's probably going to be under there. And the two levels that would make sense for that to happen would be this one at 109 and this one at 259. So it starts to run up this was the other one that we got. So this trend, which is about 190, moved to here, which is about 141, 140. So if we were to hit this, the first point we could go to is a retest of the backside of that trend. The other thing we could do is a backside of that. We could move up to that trend first, about 190, and then actually end up coming back down to this one. So there's a bit of confluence there with a lot of those other time frames that are aiming. Let's start looking at some of these. You know, these 194s, these sort of levels up in here. 190s, one. So yeah, right. Let's look at Esther. Do I have Esther? Nope. Okay. Oh, well, there's a good long that we missed. Subtle, very, very subtle, but still. This is funny. This is the thing, like, where CZ sends a tweet. If I had absolutely no idea that he had sent that tweet, tell you what this is. This is your daily range. Break your daily range. Break gets hit. Gets recovered. Fails to distribute back to the line. So misses it. Converts that into a higher time frame form of support. The next time the price touches that, you long it. So you put stop loss kind of has to go below the wick just to be safe, but you put your stop loss down here. You long anywhere in here, and you target. Oh, you target the hold, but the hold's already been tested by this candle. You'd still probably take some TP there. You'd definitely take some TP there, and then you'd target the next break, which is up here, and then ooh, tweet. You know, it would have done that anyway. It's just it would have done it maybe slower if there wasn't a tweet. That's the crazy thing. You could pick any other chart that hasn't had a tweet sent about it, work it out the same way. It would be something like this probably hasn't had a tweet, but that would be one level. Looks like it ran away without even. Looks like it actually ran away without even coming back for a retest. Unless it's on something else. Ooh, the challenge is on. What's that? Nope. Yep, there it is. That wasn't too hard to find. So range, tested, failed distribution, retest, bounce. That's it. Right, back to Aster. So look on. There's not really enough information there. I mean, looking at the weekly, it's probably going to go up just based on that and that alone. Doesn't have a downtrend, so 136 makes a bit of sense. Let's find the daily. Okay. Okay, so just watch what I did there for you 21 people that all need to hit the like button, please, right this very moment, and then I'll show you how to find the curve of the bottom of a token where it's evolving and it's time to start looking at longing it. How to find a bottom. Okay, I'm just watching the likes. Hit the like, come on. Sound like a YouTuber. Ugh. Spam in the chat if you've hit the like. Hey, likes went down. Boo, boo. Okay, I'll show you anyway. That sucks. Take your first two candles like this. Have it on these. So that is your first trend, right? I'll just do that on the weekly. Then come down to the daily and just find the candle that hard closed. Yeah, laugh. Okay. So find the candle that hard closed under the trend on the daily, which is that one. Take your trend, move it down, long the trend. It's kind of magic. Okay, now that I've shown it to you, you gotta hit the like button. Come on. Okay. And then there's your next trend. Long the trend. So basically what's happening is the token is bottoming. So it's when the initial trend is like this, and then it goes like this, and then there'll be another one based off this candle at some point in the future. There'll be a down candle. And as long as it doesn't touch this trend, it'll be something like that. And yeah, that's basically how tokens change their direction. Thank you, the 10 people that hit the like button. Yeah. Yeah, it could still go to an all-time high after 120. 120 is just like the bottom of a really high time frame range. So if it was a 15-minute chart and it hit the top of a 15-minute range, you'd expect it to try and test something at the bottom as kind of like a final thing before it either fails or goes back up and breaks out the top. So it's pretty normal. It's not really any different to what this is doing right here. Like that is the top of a range now. That is the bottom of a range. So we hit the top. Technically this too. So we hit the top. Come back to test the bottom. Now do we break out the top? That's pretty much what it has to do now. And at some point, either this side fails or this side fails. But it's not failed until it's got a daily candle, full blue daily candle down here underneath the bottom of the range. Until then, it can just bounce through here. That is why you can make so much money in a bear market. You just do what all the big institutional players and whales do. You identify the top of the range, you identify the bottom, and it will just go between them. Like tokens like Link just went between the top and the bottom of their range for like 2 years. And all you have to do is just short the top and long the bottom. So it's 2 years long. 2 years. Yes, please. Okay, so actual trade, this is kind of already taken off. Like what you got to do is find tokens that are at this level here. I'll just replay back. And it's all the same, and it doesn't matter whether there's a tweet or no tweet or what it is. You've got to find them when they're like this. And just identify the break levels at the top. Okay. And the break level at the bottom, or levels, there might be levels. And it's been hit, and then it's failed to distribute back to it. The next time it approaches that level, there will be a long. And you just got to find that. And you find that on anything. So hype, if we go back and look at hype, so what are we looking at here? We're looking at a hold level. We're looking at trying to push through the trend. Down here, we've got a break level. So if this hold level does not let the price go back to 38, what was it? 38,853. If this can keep the price here, doesn't have to break the trend, because this will break the trend, but if it can just keep it from selling back to 38.853 for the rest of the day, and someday in the future, this price will tap that level, and when it does, it'll go long. That's no different to, if we just do this, come back here. Okay. Let's just turn all this off so that it just looks really simplistic. Give everything. Okay. Break level hit. Recovered. Hit again. No, still a break level. Failed to distribute back to it. Next time it gets touched, go long. Touched, long. Wait for it, there it goes. And what did it target? Break level. Hold level. Maybe gets to that. Let's see, don't know. Yep, that's it. Woohoo, 15 likes. Okay, so that's it. What do you all think of that? And then there was silence. Okay. See how strong that level is? Okay, so that is the bottom of the range for hype. And the opposing level to that is this one up here at $46. Yeah, it really is that easy. Uh, so this will probably break that top level when it gets there because it's already closed over the top of it. So on how range develop? Yep. So first you need a bottom of the range, and then you need a hold level. So this creates the bottom of the range, this first part, which is okay. So that moment you have the bottom of the range. Okay. That tests the bottom of the range. That creates a hold level. So it's not the type of normal fib hold level we talk about much, but this is what I refer to as an advanced hold level. So you can also long this in the future as a fib trade, which is that. Okay, so creates the base of the range, creates the first hold of the range, and then the price should move up between these layers. So you've got, based on the hold of the range, you've got 42, 45, 48. Okay. So you see where it rejected of the 45? Okay, so that's because this hold level over here is actually already tested, but it's more the range level that actually creates that little thing there. But because it's closing over the 42, it's still got the ability to push up. See how magic that is? If you could honestly hit the like button more than once, you'd want to hit it more than once today, eh? Because that's pretty cool. Yeah. That's why I think we live in a simulation. Because apparently that's buyers and sellers doing that. I guess it is buyers and sellers, but there's just more algos buying and selling than there is human beings, because human beings wouldn't be that specific. It'd be a bit more random. Okay, so this hold level is the base of the range. So you have the, I need to make better terminology. This is something I'm working on. There is a guy, I spent an hour on a live thingy with him yesterday and went through a bunch of stuff, and he's taking notes and he's trying to make it more structured, and then there'll probably be a proper set of videos, etc., for people. But so this creates the bottom of the range, the reversal. This is the final hold, or the bottom hold of the range. This is the range base. So that's meant to, and this is what all ranges should look like. They should range in here. But there will be, at some point, if the range is looking to break down, it'll test the bottom hold. It may test the bottom of the range, these, and that's the final steps. If that then cannot break the top, the next thing will break the bottom. That's pretty much how ranges function. So so tries to break the top. Notice it just cannot quite close over that level. So we got no trends. We got nothing on our screen. I mean, technically, you don't need that. Technically. So quite often, what I do is I will look at blue candles like this that get created if I'm looking for longs, and I'll look back in the history and I'll see if there's areas that have structural confluence with the 4 levels that are on here. So it is absolutely not random that we have a range top back here. So break level. So let's just go through these. We'll delete all this. Yeah. Hey, 20 likes. Thank you. It's the little things. I could be trading right now. Instead, I'm chilling with a glass of ice water. I'm gonna try and not drink this week. See if I can stop for a week. That'd be handy, right? Okay, so let's rewind even further. Break level on the top side. Price tests it, fails to overcome it, fails to overcome it, fails to overcome it. These candles, they're above it, but they are not breaking it. Okay. Fails to overcome it, fails to accumulate back to it. Range top. Range top for the future. Let's call it that. You could short that, by the way. And you could target any of these break levels down here and down here. So if you want to short, you could have... See this candle has already hit that break level. So at that point, you could just start opening a short, just in case it doesn't even go back to the level, but you could just start laddering in and target that. Woompha. Geez, you would have TP'd really early on October 10th, wouldn't you? But that's... how far did it go? Yeah. Like, to be honest, I wouldn't have even known to TP down here. That's just huge. I would have TP'd here and just gone, oh wow, that really went beyond my TP. Okay. One of the other numerous reasons why I don't think that candle should be on the charts. Something wrong about it. Right. So we've got a range top. Got a hold level. So immediately you can do this. And you go, okay, do I have confluence? Yeah, I got a break level up here. What's this? Come across here. Is there anything across here? Not too much. What about that level? So no, like these levels don't really line up with much. So I don't think that's going to be the final reversal. Sure enough. Okay, what about this one? No. Maybe. But no, don't think that's going to be the final reversal. Sure enough. Cool. Hold on. We actually generated that base. And we've got that blue candle now. So you longed here because you generated the base. But also the blue candle lines up with the range top for the future. Magic. Now, if you can't hard close over that range top for the future, what's going to happen? So if you can't close over here, probably gonna come back down. So let's look at this in reverse. We created that whole candle. That's what created. Okay, now look over here. Accumulation, distribution, failed to redistribute, whole candle, target. So basically the past can tell you when the future is going to happen. So instead of longing this reversal or this reversal, this base creation, this candle lining up with the past tells you this is the one that's actually going to build the range. And then it builds the range. And this yellow candle at the top of this string, after this base creation, or during this base creation in that particular case, targets this one. Now, what happens next? Well, it fails to break the top of the range. So remember we mentioned that you could take a trade off this candle down here. Sure enough, went right into it, hit the range base, went up, built another hold level. So now the question is, does this hold level have, look at level 2. Level 2 is the top of the range. Can we find anything at level 4? Well, it's a perfect line up for the hold level. Look at that. Yeah. So the thing is, you can kind of, from a really basic perspective, you can see one candle ahead. From an advanced perspective, you can kind of see one range ahead. And if you learn this stuff, you can make money on anything, any token. Doesn't really matter what it is. And there's pros and cons to this cycle. Like this cycle's been crap from certain perspectives. Like we haven't really had a full-blown alt season where everything pumps. But if I had done things differently and identified earlier in the piece that it was just going to all be rotation, 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 well, then the benefit of rotation is that when one thing's going up, another thing's going down. So you could be playing different tokens every day and different narratives based on shillers and whales pumping one thing and harvesting another. I actually think that really the whales just haven't bothered putting any new money in this cycle. They've just gone from one token to the next token to the next token, shilled the narratives, and moved it around. Okay. What makes an origin again? Yep. So it's the original level of a range where the whole thing started. So simple until you look at a blank. Yeah, just practice like, I mean, obviously there's going to be some tools. Let's shill the tools. There will be tools that will give you an alert when these levels get created. and that sort of stuff. And you can set those up across lots of tokens. There's been a absolute bucket load of work put into these things to make them function properly. And I still don't think they're perfect, but at the end of the day, I recognize that you can set them up on 10 tokens, then make money. And that's kind of all that's important, right? So imagine just getting an alert every time a daily level or a 4-hour level or something like this has been created, and you've now got the opportunity to enter a trade. So pretty easy. So from a blank chart perspective, the best thing you can do, I'll answer 2 questions with this, is use Replay Tool. It's the absolute best thing you can do because you don't have to wait days. Okay, so you just, and having a look at a chart like that, all you do is you click one candle and you go, what does this now mean? And you look at the levels and you go, well, I have to come back in the past for this, and I'd say, oh, I might be able to long that, maybe, because it didn't technically close under it, so I might be able to get along off that. I never quite like it when they're on the line like that. Sometimes it pays to check a couple of other charts. You could use that level, be more comfortable with that level, but you might miss it. So this is what creates an origin: a break level of a range that is struck, price move away from it, and it fails to get back to it. Same thing top and bottom, doesn't matter. So on the top side, and eventually you'll just see them, and you'll see what isn't one. So for example, that is not one. It is not one because the candle got above it and closed above it. It's just a break level. If that had closed like that above an origin level, the damn thing would have mooned. Right, so that's not one. Okay. There's one back here somewhere. You can tell. There it is. So hits it, fails, hits it again, you short. All right, that's it. Just be careful with this type of thing. Like, always look back into the past with origin levels, because that there looks like it should be a short on the next candle, but see how the next candle goes straight through it, because the actual level was this one from the past. So always go back when you're looking at these and see if there is a range that was hit that rejected before this one. So yeah, wasn't that, it was that. So somewhere down in here, so that was one, as was that. So this created this bounce and the bottom of the new range. So the new range is this candle. Sorry, this candle. No, actually it should be that one. And so somewhere like there is a break level. Failed to get over that. Still end up going a bit higher. Might not be that one. If it is that one. This thing could be on a different time frame though. There's a lot of candles in that. There's a lot of candles in that. Generally speaking, you don't get the base or the first hold of a range is not usually tested, so it's usually the price runs away from it, which is partly why if you've seen the content on fib trading, just basic fib trading, we always talk about the risk factor of taking a trade on something that has been left behind, because the one that was left behind is actually typically the final base of the range, and therefore it's got an obligation to at least try to support the range to a minimum level. Granted, that one got whacked by October 10, but if that wick wasn't there, which it really shouldn't have been, that would have bounced. So that's... So I don't know if that answers your questions, but all you're doing is you're looking for identify a break level. Has it been hit? Has the price failed to move back to it? Long. Target first break level or any other origin level that might exist up inside the range. A little bit harder in price discovery because you don't have the history back here, but you just target the break level because the only way it can find a equivalent to this, if it's in price discovery, is to create one because it just simply doesn't exist. So any break level can turn into one, so therefore you could target and just put your TPs on these, and then you would have got all three of them before it reversed. Yeah, correct. Yep. Yeah, 1.168 point something is basically quite an important level for Sol for a lot of reasons. And yeah. Okay, so while we're at it, what about swing trade in a range? Because if the first hold level that is the one that creates a range is often not revisited until a high has been made for the range, then why would you wait for the price to come back to the first hold? Would you not be better to trade the range that it's building? So playing forward, oh, there we go. We've longed because we caught it. Yeah. Didn't we do well? What are we going to target? We're going to target the first break level. That's our target for the first trade. And then we're going to go, we fib this candle and we go, oh, that lines up with that. There's our second target for the trade. You could take a partial TP there as well. And you could even look to take a TP up there, but it's probably not going to go past the top of the range or too far past the top of the range. So these are just break levels, but that one's more likely going to be the top because it lines up. Okay, goes up there. Now, at this point, you could put an entry on this candle with a second entry down in here, or you could refine this level and try to find the entry. And you could take it back to 39. So there'd be a trade for the future when it comes back into here. But the thing is, if it's going to build a range, it's probably not going to stop. It's just going to keep going up. So let's say you open the chart and you were here. Well, now you have to take a swing trade because you know that if it comes down, you can get out at this level. But what if it just keeps going up? So you look at your risk and you say, cool, I'm going to risk 1%. And I'm going to take these TPs and I'm going to enter here, and I'm not going to wet myself if the thing goes down, right? I'm not going to worry about that because it's probably not going to go down. And if it does, I'm going to increase the size of my position down in here, and I'm going to exit in a profit here. So that's the way you would play it because you're just mid-range. And then you get that, yeah, no, dang, it's going backwards. I'm a little bit underwater. Don't worry, because it does that. Okay, because it has to go down like this. Now, there's another thing you can do too. If it has to create the base, so bottom hold, base, you can wait for this candle to close blue, and then you can enter, because it has to make this candle to be the base for the range. So you could look at that and you go, okay, I'm not going to enter. What I'll do is I'll wait for this candle to pull back. It probably won't enter my fib trade, in which case you're like, oh, damn, never got my fib trade. But understanding that this is the one that creates the first hold probably will not get visited until after the top of the range is established. So when this one pulls back, you long with the same target TPs, with the same risk perspective and the same amount that you can always add into it and get back out. And the funny thing is, if you'd done that, your entry would be under the 1618 anyway. So if the range fails, goes down, it'll come back up to the 1618 and you're out. So it's not a big deal. And then you got your TPs. And then you're waiting to see if it can hard close above the range to expand out and create another range. And when it doesn't, you know you can short it. And where can you short it to? You can short it back to the base of the range, which is this one. And if this fails, you can short it back to here, and then you can long it from here, because that'll have a long. So you TP your short there, because that's the first point at which it can then range back up again. You enter your long, and then you can TP at the 1618, and you're done. Your trade's done. So that is entering within a range, how you would enter within a range, the optimal place to do it. The TPs are still the same as if you'd got the entry down here. And then how to trade the potential range failure. Yup. Yeah, how to short the top. Okay, and then and from knowing all of that, you basically, yeah, mind blown. So let's go look at BTC. What's this? Bounce. You would have well and truly TP'd too early, because you would have TP'd there, but still, it's an $8,000 or $7,000 move on BTC on a 3-day chart. So there's other just little insights that you will establish over time, like when it wicks below, it's usually going to go higher, right? Because they grab more liquidity. They don't usually just stop at this sort of level if they're planning to go higher. So what about over here? So something in here. This would be a good little challenge. How do I stop that? Okay. Okay, so this is where we are now. That level, created, tested, back up over it. We haven't created a hold. So let's just chuck a fib on this candle and let's see if it has any relevance to history. Not really. Not really that I can see. Because you're probably looking for something that kind of more lines up with that. So unfortunately, that means that there is a pretty good chance that's not going to be the base of the range. Okay. So kind of needs to be a smaller candle. What's this? On BTC, you switched the 3D chart. No, you can find them on the 1 day. So it's that there, but that happened there. Is that level down there, which is 94. Yeah, I keep finding reasons for this thing to go down, eh? Unfortunately. Because that just does not seem like the right candle. Let's just try weekly. Yeah, see this. And what about that one? That one. Yeah, so that was the range candle. This is lining up with that hold level. This is lining up with that hold level. Yeah. So you can see how this lines up with this. Okay. Now, so this is also a retest of the top of the range from down here. Just bouncing off that. Whole candle. What's the next one? It gets a bit tricky here because we're in price discovery when we're up here, so there's not. Yeah, so bounces, hits, bounces, hits, comes back, tests the hold. So it hasn't made it up there. So what about this candle? Oh, looky, looky. That's pretty close. So that's an origin rejection level on the weekly. That's a support level. That's a break level we've hit. Something just does not seem right there. Hmm. So if we stay in this range for the rest of the week, if we stay in this, I don't know. Don't like that because nothing lines up with that. Something should line up with that. So we might see 117 and then a failure But you know what 117 would do if that happened in the next week? So this is all crystal ball gazing stuff here, guys, too. So, trying to predict how they might create ranges in the future, and we don't even have candles yet, is really, it's a fool's game. We don't really have a proper base yet either. So I'll give you an idea of what could happen. We've tapped this level. We've created a candle where the middle of the range lines up with a rejection point. The next weekly candle could travel up to that rejection point, at which point it converts this level into one of those weekly bases. Then they reject off this, liquidate all the people that chased it, come down, hit the new. So this would be the week after, by the way. So this would be next week. They go up here, hit this, stuff around for a bit, close the candle. If they haven't by that point gone back to the 99,500, the next candle hits the 99,500 the following week after. That's another dip, liquidates all the traders that chased it, thought it was going to keep going forever. We put a fib on whatever that new blue candle is, and maybe it lines up with that. And if it does, that's probably the one that will actually give a push back to the proper high. So that could happen. How long will it take to happen? Well, we have to close this one, which is 3 days. It has to pretty much stay like this. Can't go lower, or this level won't actually line up. So we might see that we have some upside for the next 3 days, but not bigger than 110. Because if we go bigger than 110 in the next 3 days, it's not a blue candle anymore. Then we might engulf it, hit the 117 the next week. We might be up there for a while through the week. Then that converts the bottom to support. Then they sweep the support, which would be fulfilling all those 96 to 93 targets, but it would also be a sweep rather than just a tap. And if it's a sweep, they're going to go higher than this. And then whatever we put the fib on, it'll be a candle that, let's just hypothetically say they go to 93,570. Might have to use the thingy. Coordinates. So let's say they go to that, because that's kind of like the 3-month entry. Okay, and then we want the 4 to line up with the top. Yeah. So, guess what? That's about 100. It's going to bug me now. Can I get it perfect? Dang you. Because that means it would be the top of the candle would be above the level. So then it's going to engulf it and it goes back up. Yep. So that means that if it's swept down to 93,570 from a starting point on the candle of just above the level, next one comes up, engulfs it, all-time high is the target. Everyone bored by that? Sold. Yeah. Yeah, well, that's That is how they can create ranges. Suppose there's one other. There's one other really bullish possibility, but in my mind, it doesn't make a lot of sense. That would be that they go up over here, close over top, hit it, and bounce, and it just goes straight through everything, which could happen, but yeah, not a big fan of that idea because it just doesn't really happen that often. But yeah, that's the top of your range if you're wondering. Beer opinion? Well, that's pretty easy. Just lose this. Just lose it. That is only turns into support if somewhere a weekly candle doesn't go back and touch it. So they could just screw with everybody and just tap it, tap it, tap it, tap it, tap it. They could do that. It is not support, even though you might think it is. They could just keep doing that. And then they could close one underneath it. And then that's our next level, 76. So yeah, if we lose that level, say hello to 76. There's some kind of things in between like this that might support it. There's a few things like range trends that might mean it dives below. So sometimes when they hit a support level, they sweep the liquidity down to the range trend to do the retest, which is down here at like 70k or 69 at that point, or it's about 72 at this point. So these are, in my opinion, these are kind of bear market levels. We pretty much, at that point, we have lost this range that exists up here. But I don't think 90k is really a bear market level. Because unless it makes the support here, which is very bullish, just like it did over here, everyone was waiting for this range down here to be retested. So people were just going, oh yeah, I'm going to buy below 73. That was the that was the call at the time. They were going, oh, what about this level at 70, and what about this level at 64? I'm going to buy down there. And then what they did just to screw with everybody was they made that just in the middle of nowhere. And while everyone was waiting to buy at 73, 70, 64k, they built the structure, turned it into support, and went to a new high. That was the target. So, and then for a long time we struggled with 108 to get over 108, and that was our sort of level. And we haven't technically lost 108 yet. So, I unfortunately in 2 days' time, if we're still down here in 2 days' time, it's a problem. So, I mean, I'm not too opposed to looking at this because that's relatively close to that, which would put the blow off top up here at 152. But it just doesn't have any confluence with this, which makes no sense. Yeah. So that's probably a bear view. 2 days and 21 hours. If this closes blue, not so flash. Why didn't I see that before? So hard. Too many candles. So move, failure, failure, creation, got through, retest the top, retest the top. So it could even make it can even make a range in here, just between these levels. Then it could sweep, break out. Yeah. Cool. Well, anyone else want to know any other trade secrets? While Sol still goes up. So you can apply this to a 15-minute chart too. Let's have a look. 14-day hold. Let's have a look. It's Esther. Oh, new tool. Yeah, this already has a target of 134. As long as it doesn't lose 108. And if it loses 108, it fix. Now this is just another reason for it to go back to 95. It's already under 108. So the 1618 is the base. Yeah, and it hasn't actually tested it, so so if it goes here, it's not actually even testing the hold at the bottom. So it could definitely do that down to here. And then try to break the top. It's got that level for rejection, which it hasn't hit yet. Let's see if we've got any confluence with this. $103. This has still got quite a while to run on it, but so now if you're thinking about like, because this would be a good example for, should you close a short? So if this was your short that you'd taken from 111998, based on the normal fib method, you'd TP here at the 103.222. So that would have been your short. But you actually kind of know based on what this candle does whether or not you're going to get continuation, because if it closes under the 103.222, it's more likely to then reject that level and continue down. And there's a lot of confluence there with, coming down and hitting this whole candle, which would be that level 2. And you can still fail a range from level 2 because that's the 50%. So failing a range being built to the downside means you end up going to the upside. Failing a range being built to the upside would often mean you end up going to the downside. So there's, in 12 days' time, if we close under that level, we could come back down here to 89. So to put that into perspective, it would take a couple of weeks, right, to build that support base on the weekly. So that's, 14 days. So it could happen. So you're pretty much looking now at this bottom range. Yeah, so this closed just above the 50% and then dived. So more likely to be a liquidity sweep. There's a higher probability that it's up before down based on this. But it could change in 12 days if it's under here. Then it'll go down. Yeah. See this level here? Break level, failed distribution, rejection, 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 overcome, flip to support, goes up. So that level is basically the tipping point on the 14-day between whether we go up again or whether we break down. And it happens to line up perfectly with the 2 and the start of the whole candle. Everything's kind of around that area. 108, 240, 108, 300, etc., etc. It's like one of the most important areas on the chart. And it's also sort of why you have to have a pretty reasonably, like a pretty reasonable overview of a lot of these timeframes, because it might be the weekly might be 108, 350, but the 14-day might be 108, 240 or some different number, 353, and yeah, the numbers can be slightly different. In which case you think you got front run, but it was just some other time frame. I don't know. Does that make sense to people? Or questions on it? Or silence? 100%. Good. You can teach everyone now. Is the mic loud enough? I'm sitting back. I probably just said that a bit louder too. Is the mic loud enough? I'm sitting back a bit further in my chair. Chill mode. So would higher time frame origins? Okay, so it's not that they have higher power. They all do the same thing, but a level needs to match a level. So if you reject this level right here in future at 122.335.16, you need a level on the bottom side that's the same to actually go to. Okay, so that's the that's kind of the rule. So, unfortunately, it's going to have to make one because they really, or it has to get back inside there because there isn't anything else. I don't think. Yeah, it's not one. That's not one. None of that is. Nope, nope, nope. That is. Yeah, so it needs to make one. So the closest point it could make one is there, 98, 200. So yeah, if it doesn't recover 108, 353, it has to go to 98,200 or lower simply to make a level that could offset that top level. So that's the other way you could look at it. Oh, whoops. Wrong level. It's that level. 1, 2, hit it on the yellow candle. Who let the newbie in? 1, 2, 4, 4, 7, 4. Yeah. Cool. So if you have this chart on your screen and just keep an eye on it, there's many ways to figure out if we're going to go to a blow off top. First is that the next time it touches this level, it should be an instant rejection. We're talking to the decimal place dump. Okay. But if it doesn't do that, if it does this, oh, it's going to go lower. You know, that's the kind of thing that's how you will know. It's what happens when it touches this level. Going through it like that, everyone will be so bullish, euphoric. They'll be like, wow, it's amazing. And there'll be 21 people in this chat right now who need to be going, this is dangerous. We're probably going to go into a bear market. If you see that. Yep. So it's kind of the same level on the weekly. So you could probably just watch it on the weekly even. Green and bigger. Don't have anything on the monthly. On 50x. Well, you got to be a little bit careful just taking hold levels on high risk. I feel like every time I see someone say anything about high leverage, I feel like people don't necessarily understand the purpose of leverage. So chuck in the chat where would you put your entry and your stop loss? That's the real question, okay? And then we'll talk about leverage. Okay, so if we go to hype, what did I do with hype? I lost it. Fartcoin. Oh boy. Okay. Let's find hype again. Hype. Whew. Hello, darkness, my old friend. Is that completed? Not quite. Okay. Just expect maybe a double bottom on hype. Slightly lower, maybe somewhere in the next month or so. Anyway, okay, we'll have a look at Sui in a second. But Marty said, oh, Marty. Okay. So let's put all this into practice. So I'm looking for confluence in the levels based on what candle I put the fib on. So if I put it on, well, actually, let's start right at the beginning. Right, so let's start right at the beginning. On the 1 hour, this was your reversal. So break level hit, failed to distribute back to it. Sweep on the entry, probably going to go higher. First hold level created here on the hourly. So now let's see if we've broken that range yet. No, we haven't. Do we have confluence with anything? Doesn't really look like it. Do we have any top confluence? No, we don't really. So I don't know. I don't know if I like that one. So then let's try this candle. This could be the base of the range. Yeah, I like that one. I like that better. Still not perfect. So the reason I like this better is it was left behind and then it bounced off the 1618. Okay. But it's failed to get to the 3. It's failed to get to the 4. So the range is shrinking. It's getting smaller. And it's... So this one. Yep, that trade played out. That's got a bit of confluence with that at the top. Okay. Got a range trend here. It's looking to break. So this is now adding in things like, holy crap, thank you. I just saw that in the chat. Thank you. So we've got a range trend here. It rejected on that candle. If it's got a hold level to break the range trend, it's got potentially a 1 hour reversal pattern happening here. And if this is the base of the range, it has been tested, so there's a little bit of a risk to the fact that it's being tested. But if it builds this reversal pattern, if it breaks this trend, this hold level's been tested already by this candle. This hold level won't hold anything because the price never even got below it. And the top of the potential range lines up with the rejection level from over here. So yeah, if it can get out from under trend, it's probably going to go long. Does all that make sense on high? And so you'd probably just want to wait for maybe 45 minutes. Just hope it doesn't go, but you know, don't FOMO bad. You kind of want to wait 45 minutes and see if it hard closes without touching that hourly level, in which case you'd have an hourly trade. And if it breaks the trend and takes off after that, you're good. And you've still got to look at just taking TPs, because if you're basing it on an hourly support, you still just have to TP on the hourly levels, which is just this, that level on the hourly is why it couldn't get up. So that roughly lines up with that first break level. If it hard closes a candle over that 41539 on the hourly, that'll push it up to that next level, which will be the completion. So it roughly works, right? If you break the trend, you're going to target, because the hold level is this yellow candle here. It's been tested by this yellow candle here. This hold level has been tested. It may form a support base here. If it breaks a trend, it targets the break level. The break level has confluence with the previous range top from over here. If it closes above the previous range top, it's probably just going to power through these break levels and go to the range high. So that's how I see that. Right, let's look at let's look at Sui. Okay. Sui. Okay. Oh, holy heck, look at that. I really need to spend more time just looking at random tokens. You could have just had an order sitting there at 60 cents. Look at the pattern. That was the range base. That wasn't the range base because it never got back to it. You could have said that. Wow. Catch you later. So Sui. Is Sui a good time to enter? I'm going to go with no. But it might be. This is weekly. I'm going to go with it might be if it recatches the 2.22 level on the weekly. And if that's the case, you just TP the break levels again. There. Now, if it doesn't, ooh, this is the top of the range up here at 4.3. Yeah, if it gets back up above that 2.220, then this thing's probably going to go quite high, just because that's a hell of a sweep. So, okay. Let's just look at that on the daily. No. Okay, so this is what it's back up inside the daily range, but it's not. Yeah, well, it couldn't go to zero. There was a range base at 60 cents. You could have just had an order there. That would have been one of the best entries of the entire I was about to say the word bull run, but it really doesn't feel like a bull run, does it? But that would be one of the best. That would have been one of the best entries, and it was there on the chart. And hey, need to get these systems built. Okay, so where are we? We have regained the daily. Closed back up inside it from over here. So let's do this. Let's cheat. Okay, these are our levels. No longer need to be an expert. And let's just we'll get rid of break levels for a minute. We'll look at origin levels that have been broken but untested. And we'll look at non-broken origin levels. Okay. So if you were to take a minimum sort of swing on this, you should be able to get back to 2.1092 from here. I don't know whether that's what percentage that is, but about 3%. That'd be kind of a minimum level. But yeah, if it recovers the weekly, take my money. Yeah, those discussions are nearly there. I think I'll just see what they're saying now. Okay, they're talking about feed picks and seed phrase scammers. Oh boy. IT people. Interesting people. Okay. Yeah. So yeah, you could definitely open a swing position. The other thing to identify is just whether there is a trend, because so you can trade between these origin levels, but you've also got hold levels and trends. So if this has bounced off a trend, it will actually be heading up to the hold level up here at like 2.28. Sometimes it just has to waddle around to find its way there, but did this go down to this level on every chart, or did it stop on some of them? Sweet. Spot Binance. Yeah, wow, really did. Yeah. Yeah. It's kind of crazy, isn't it, when you think about it? A bank might pay you 3.37% interest in a year on some kind of term deposit, and you could just buy spot of that, and it's probably going to TP somewhere in the next few days, and that's years with the bank interest on a token. And yeah, I know there's risk. I do full well know there's risk, but let's see if engulfing that candle means anything, eh? It's not really perfect. So you might get a another blue candle. So sometimes also what I have in my mind is that if you're going to start to create a range, you need two candles for a new range trend. So if this candle comes up, wherever, closes yellow, then you should really be expecting at some point another blue one so that you can get a trend. And then that trend develops and escalates as it becomes a weekly and all that kind of thing. So that's yeah. I don't think. I mean, I wouldn't open a really high leverage position on it, but I don't think that's going to be the low. And I don't think that's going to be the high. Let's see if we can find that trend, eh? Oops. Let's do it the lazy way. Cool. So first thing I'm doing is I'm checking off the back side of a candle to see if the rollover happens at the top. So you know how I said you can find when things are flipping to become bullish? Same thing applies, by the way, for when they become bearish. You can see how if you measure the backside of the accumulation candles, they stop reaching the prior trend. So that's a sign of a top. If Marty knew this, he'd be a lot better at his predictions. Okay. Okay, so what I want to do is I want to find the daily trends. So I'm just going to mark out the weeklies. Yeah. Look at that. By the way, this is how you dump. This is how they do it. They position. So this is what I refer to as positioning. So, and this is why I always look at every single daily close that's happening on any given day, because when they take a candle like that and they park it just in the right spot, they can open under the trend and they can dump. That's how you position something to dump. Okay, so take a line, take a ray tool, and we're going to overwrite this line. So I'm just going to put it from there to there because that was the trend. Well, that is the trend, I should say, on the weekly. And take this one. We're going to run it from there to there because that's the weekly on the top side. Now I'm going to turn this off. And we're going to go look at the daily. Okay. We'll find the pivot point, which is the little circle there if I hover over the trend. And there, my friends, is our daily trend. So I followed the same rules. So the indicators know the rules and they just build the trend the way it should be built. But the rule is, of course, that I can't move it to any of these candles in here because they're touching the line, but I can move it to this one because it's not, body's not touching the line. So take the trend, move it to there. There's our perfect daily trend. If you wanted to take a long on it, you took that long when it dipped down there today, and that's what's creating the bounce. So if you wanted to take a scalp, we'll call it a swing scalp because, it can still go down before it goes up. But if you wanted to take a swing scalp on this, it would be between the trend and this daily origin level here. So you would have entered at about $2-ish when it dipped down there today. And you take your first TP there. And then what you do is you target the hold level, because the hold level is the technical target for the trend. Right, so TP1, 2.1, TP2, 2.28. Now, let's find the top side. Okay. All right, so the main issue with the top side is the top side doesn't have a candle broken above it. So that is just the pure weekly trend that's rejecting the price down. And so there is a bit of a trick where what you can do is you can rewind it. So you find the one that existed before that one. So that would be this red dot here. So you move it to there. And I'm just going to call that line weekly. Let's call this line, I'm going to call it daily because we're going to make it into a daily. Come back here. Now I'm going to cycle through. So let's find our little dot. Where's our little dot? There's our little dot. So you don't look at the candles behind. That was just some days over the top of the trend at the time, unloading their positions before they pulled back in under the trend. So we'll look at the dot here. Done. To there, to there, to there. Hey, look, it found it for us. Gotta love it. Okay, so we know that that is our daily top. And so now I can just cheat again, and I can move the, I'll just cheat, move the thingy. Across here. Okay, so there's our daily trend. And by the time it goes through all the candles, so can you now see why the price is so slow? That's why the price is slow. It's not going to get to these targets very easily, not today. I mean, it could possibly push up and hit the first one if it gets a bit of a bullish pump. But it's more likely that it's going to need tomorrow to actually be on the correct side of that trend to be free to move up to the target. Most likely. If it does push up to the first target today, it'll be from the wrong side of the trend. It will likely then retrace back down. Now that could be how we create our local uptrend or our range trend, is that it could push up, maybe close up today, but from the wrong side of the trend, reject down and create a blue candle tomorrow. Close down and maybe create our very first range trend from this, if this is going to be the bottom. Crystal ball stuff. What's this? I was thinking. Can you expand more on range base? What determines range bases? Yep. I need to get the terminology sorted actually, because I'm an erratic nut job, but so a range base is, let's draw a range. Let's just pick a blank spot on a chart. Let's get rid of all these candles. Firstly, before I do that, do you see how I found that on Sui? And so we went weekly, we rewound the weekly, we used an older weekly trend that had been broken to find a daily. We used a daily to find the array of the daily, and then I just cheated to find all the rest. But it was but that's pretty much how it works. Finding the bottom was much easier. Like we found the weekly, we marked the weekly in, we moved to the daily, we found the daily. We knew then where we should enter, and we got it. You know, if you entered this morning on that little dip there, perfect confluence for an entry. Backside of one trend, which is not broken yet, but it is hopefully trying to, and the support trend, perfect confluence. That little entry right there. And you could have already TP'd if you're just trying to make 1% a day. You know, you could have just taken 2% up. You could have made your 1% a day goal on spot. Don't even need leverage. So that's how we did that. Okie dokie. Let's get rid of all of this. I was just thinking, I think you might have just pushed me over the payout threshold for YouTube payouts, which means I'm gonna have to put my tax info in. Good news, bad news. Government always wants their slice. Okay, let's get a blank chart. Okay. So this is the basic pattern of a range. Price is going down. It finds a bit of a plateau. It sort of moves around a little bit. Then you get a bit of an impulse. Well, actually, sorry, you get it down. Then you get a bit of an impulsive move to the upside. Then a little pullback. And then usually a bigger move. And then a range. So this area that's down the bottom here, and this area at the very bottom here, and this area across here, and of course this area up here, they are the key parts of a range. So yeah, so initially I anchored it on the weekly. I haven't fully looked into the development parts yet, but I was playing around with it this morning, and it actually looks like it automatically finds the daily if you've got it anchored on the weekly. There's a version that's specifically made to do that, which is this advanced time array trends, and you can actually just anchor that. You can choose to anchor that on different time frames, but the actual standard single one kind of does it by itself as well. But I need to check if there's any errors in that, because I haven't really tried a whole bunch of scenarios. Just seems to be a byproduct of, I guess, if structure is very much it's all like price is very scripted. So like if it, as long as it's very scripted, it probably will just find the daily candle when you change the time frame, because it's just going through the same steps. But yeah, so ranges, every range is going to have, you know, be built like this. They might not be as big. They might be really little, you know, because it's in consolidation and it's just going sideways, or they might be really big because it's a bull run, you know, like, but every range is just going to be sort of like this. So what will be all the way down here will be some kind of origin level, and that's why it's called an origin level, because it's the original level of the range. What there will be sitting here will be some very, very low risk fib trade. Okay, so very, very low risk fib trade. I'll call it very, very, because the whole candle that's at the bottom of a range is designed to have a minimum obligation bounce. Typically it will go, I mean, it will definitely go to the 1618, but more often than not, if you've got the right whole candle, it'll go back to the 50% of the range. Then here you're going to have, okay, so this is the base of the range, and actually I'll just call this the final hold. Okay. And then you'll have your range top. So as far as levels go, if you've got the levels correct and you've found the right candle, this is going to be a 4618. This is going to be 1.618 or 1618. This is going to be a 1.0. And the bottom of the candle that creates it, the distribution candle, is going to be the 0. So this down here will be your 0. And the origin level will be a pattern. And you'll see that develop before the range gets created. So every single range is going to be like that. If it's a long range, of course, you can flip that upside down and it can be a short. So, you know, hello, we have a short. Hey, isn't that cool? The text stays upright when you flip it over. I could do that all day. So then how that ends up looking on a chart, obviously, is what blinds people a lot of the time. Like they look at a chart and the first thing they look at is the price. You know, is it good? Is it bad? You know, that's the kind of first thing most people gravitate towards. They look at colors, like they look at red and green, and they get excited when they see green, and they feel scared when they see red. You know, stop, go, stop, go, stop, go. You know, so there's a psychological aspect to a lot of what I do. There's a reason I have blue and yellow. You know, it's not stop, go. Doesn't mess with my head in any way. There is a person who's going to work on the colors and for the lines and the indicators and stuff for that exact reason. Like we want to make sure that these things are colors that just don't mess with people, and therefore they you can make better choices if there's nothing subconscious going on in your mind. And yeah, so knowing whether a range will, yeah, it is much more soothing. Knowing whether a range will develop. So let's say this one here, there is a range. It's in here. Okay, so bottoming pattern, long, right here. Fib that candle. Take first TP at first break level. Always take the TP at the break level. You don't know whether or not the range will continue or whether it will fail. They don't always get up to the 4, you know, so this one here, bottoming pattern, that's the start of it, doesn't distribute back to it, doesn't distribute back to it, doesn't distribute back to it. Entry on the long, so as we open your position, fib the candle that will become the whole candle, almost like a psychic, sorry, repositioning myself, but getting sore, sitting in a chair too long. Almost like being psychic, you can look at this candle, put the fib on it, and go, does it make sense? Well, not really, because that should be lining up with some kind of rejection, and it's just kind of in the middle of nowhere. This should be lining up with something, and it's just in the middle of nowhere. This should be lining up with something, it's just in the middle of nowhere. I can psychically predict that this range is going to fail at the first break level, which is right here. And that's what it does. Okay. Now, it has to break trends to get to that break level, and this is where it really gets interesting. Well, if you're a geek like me, this gets interesting. I know based on the horizontal, and this is why a lot of traders don't worry about trends. I reckon their win rate would be a lot higher if they did worry about trends, but you can also therefore predict that the trend is going to fail because the minimum level that the horizontal target will get to is above the trend. So the trend has to fail one time. But then once it hits the horizontal level, the trend will win and pulls the candle back under, keeps it under the trend. So that's kind of like a range trying to get created, but at the same time failing as it actually creates it. So then now we've got to try and find the pattern again. But the pattern won't always be right here. In fact, there is another attempt. This was an attempt. Okay. Failed because of trend. Straight through. Keep going down. So comes over, hits the level, goes back above, comes back down, hits it, gone. If you'd taken that long, you would have got stopped out. That'd be one of those odd sort of occasions where, yep, gone. Should you have taken that trade? It's pretty risky. You did get a little bounce off that prior level, that one there. That level, it's hard to say whether that even bounced. Let's have a quick look. So that's the candle that entered it. That's the level we're checking. So check this. And let's just put the trend on there. That didn't exist. So it was this one. So it's right up here to there. Okay. Let's turn all this off. And let's get rid of this. Okay. So if you'd taken this from the level to the trend, what would have happened? Would you have failed, or would you have got your trade? You got your trade. Okay, level to trend. So this is why trends are important. They are levels. You know, they are resistance. When people purely focus on just horizontal levels, they can lose a lot more than if they actually focus on looking at both horizontal and diagonal levels. So you would have won that trade versus losing that trade if you're just purely focused on horizontal. So my win rate is what it is because I very conservatively take the first point where price could reject, and then sometimes I see the price continue to go up, etc., etc. But you know what I also see is my P&L goes up. That's all that really matters in trading. You just want to make sure that your profit line is going up. So, yep. So now next level on SUI. So like I say, sometimes you're not going to find the level just here on the screen. You're going to have to look back into the past to find the level. So that would be, I'm just going to cheat again. Okay. So the next level is going to be this one at about 210. I've been a little bit careful with these just because I have a bit of a tin hat theory that this candle should not exist. This wick should not exist. I sort of have a bit of a theory that it was kind of like they pushed the fast forward button, and in the real world, this is not what should have happened. So, but this level I'd be very comfortable with because it was created in the past. So that was that 1.96, and the 210 I'd be, don't know. I'm assuming that this is the one that hit the break level and this is the failed distribution, and therefore I could take a trade on this, but because this is the one that created it, like I say, I'd be a little bit dubious of that. This creation is real. So you could look to ladder into a trade down in here. You kind of want to know where your trends are. Let's turn those back on. Go. So I got a decent distance from the trend if it hits these relatively soon. just happened there? Oh. Replay tool. Too much data. See, there's a bug. Okay. And so it bounced down through. So if you'd taken the kind of dubious level, you would have been able to get out of the trade when it bounced down and retested the backside, and the trends had sort of tightened up by this point, but it's still kind of risky to be taking any longs until the trend actually gets broken. And trends can really only be broken with time. You know, you can't just magically shoot a candle through trends. It doesn't work like that. So you have to get over the other side of it. And so then that leads on to things like how you can tell it's time to go watch Netflix. Because if your TP is on the other side of a trend, it's going to be pretty hard to get to it. And there's not a lot of points staring at the chart all day because it's going to have to get to the other side of the trend before it can actually get to the TP. And trends are basically a combination of price over time, and they can only be broken by price over time. So that's trends. Basically, charts are simply just price and time. There's only two things: price, time, your two axes. That's the only thing that the algorithms know is price and time. And every choice that they make and every trade that you can take is just based on where is price at a certain time structurally compared to where it has been before. And if you can wrap your head around that, you can print money. Damn, that little candle. Stuck. So from a practical perspective, I wouldn't take this trade personally. I know it'll play out, but how's it going to play out? Is it going to come back down first, etc.? I might get an opportunity to enter again, you know, at a lower price and still get the same target. But cheekily tomorrow, when right on close, if we're just sitting on the other side of this, then I might build the swing position because it'll be in a position to hit the target in the next candle. If you get some kind of little, fake out pump to the upside during the New York market or something, then I'll just take it as a, oh well, there'll be another trade, move on. Also, just once it starts to break the trend, you can just take it up to there, being the hold level. So that's maybe. Let's have a look. So these are my scalping charts, and as you can see from the things I just paste in the Discord, scalp, scalp, scalp. All of the levels exist on a 15-minute chart too, so you can pretty much just do exactly what I've just shown you on dailies. You're better off to, like, if you want to be safe, you're better to trade the high time frame stuff because high time frame doesn't get messed with as much. But once you get the hang of all of this, then you know that hey, we moved a trend and we opened under the trend, so we're going to reject. And where are we going to reject to? Well, the hold level got tested by this candle, so we're going to reject to the break level. So if I rewind that, a couple of, I take that back to there. Okay. See if it works. Sometimes you have to scroll all the way back to let it find the trends. Just use the scroll wheel on the mouse. Okay, so we're here. We're above our trend, but we're creating it with a wick on the top, and we're on the wrong side of the support trend. So we're already starting to roll over, right? So that's trend moves to the top. Now, if you're quick enough, because it doesn't just instantly drop like that in real life, but if you're quick enough, when that moves to the top, you short. And the knowledge you already have from history is that this hold level was the long that pushed that candle up. This relocation of the trend has confluence with a prior data point. So this moved to this candle right here, but perfectly is where that rejected. Oh, hold up. What's going to happen next? First touch, down. It's going to go beyond this line because this line has already been tested. It's going to test this line. So straight away you've got a scalp, and it might only be 60 cents, but 60 cents, 1-to-1, high leverage, doesn't matter. You can make money off that. Okay. Probably going to come to this hold. I would have TP'd at the break just in case it tries to convert it into an origin. So I would have TP'd there, but you could aim for the hold. Trends typically target holds. They get there eventually, even though something else might get in the way. If you saw my post this morning about, I remember when 3-minute trades used to not take 2 hours to play out, but I was in a 3-minute trade, 3-minute time frame trade for 2 hours. But got the target. That's the point, right? So yeah. So that's a scalping chart. What do we got here? So I would just go 1-to-1. So I look at my target and just basically put it up here. Your confidence changes, and not in the wrong way, but your confidence changes when you really truly understand how price moves, because you can see almost, well, you can see a candle ahead effectively, and there'll be the odd time that it does a sweep. But what I've found historically is that the sweeps generally are never as big as the distance to the target. So if you take, it almost works in reverse. If you took the target, either the bottom of here or here, and then you took the trend and you placed your stop loss above the equivalent distance of the target, it doesn't seem to hit the stop loss. And ironically, that would actually be the range top. So it's probably not going to go over the range top if it's stuck under the trend. Like there's a more complex means of figuring all this out, but you effectively create a range top, then you create a hold, then the hold rejects to create a trend, then the trend keeps the price moving down and creating further holds until it can eventually get fought back in the other direction. So there's a relationship between ranges, holds, trends that is way more in depth than people need to know to make money. But one day, if you care enough and if I can be bothered, maybe I'll talk about that some more. But for now, you don't need to know it to make money. So, yeah. So you take a short, and then you stop. You're done. You could technically make your entire daily percentage off that one scalp if you had the confidence to risk 1% on a 1-to-1. Now let's see where we're at. Well, the hold held. The hold held. See where that trend is. Yeah, if you did it across enough time frames, you could achieve 1% a day on a bot. I think the main tough thing is bots don't really know where the trends are, that would be one of the things that could catch it out. I mean, the fib, I think about 6%, roughly 6% of fib trades fail. Plus, yeah, fib trades, there's various entry points for them as well. So, like one of the ones I took this morning was just insanely close on the entry. It was on a 1 hour chart. Yeah, it was in here. It was this one, that candle. Damn thing didn't really even touch it. Okay, so this is, I don't want people to do this, by the way. Yeah, I don't want people to do this because it can go horribly wrong. But I'm going to show you anyway. So this whole candle here was entered by a candle that is within the same range before the range exists. So if you think about the theory behind a whole candle is the base candle at the base of a range. It can't really be tested by a candle that is the one immediately after the engulfment, because the range didn't exist until that candle closed, and it can't be tested in the past. So you can actually take trades on these now, which is what I did over here. But that candle was so damn bullish that it just barely even nicked the wick and it took off. And I was lucky to be even in this trade because I had slightly front run the wick. And yeah, that was one of the trades from this morning, or just one of the 1 hour scalps from this morning. And there was the 3-minute short, which was based on, what was it on? 15-minute, no, other chart. Sorry, go back to my other chart. And then there was this, which was based on this candle over here. So this was that, and this, and 3-minute. So I entered on the 3-minute reversal, which then took hours to play out. So the target, and this is the problem with trends. The target was down here at 161.2, and this was the 3-minute reversal created, or the 3-minute range created off the range back here in the past. And what it did was create the range high, the same pattern that you've seen over and over that I've shown you today. Went up, tested it. I actually entered here when it did this initially. Watched the damn thing waddle around, watched it go all the way back to my entry. Totally confident, right? I don't care. I'm going to get my target. I know I'm going to get my target because I've done this so much that I know what the actual chances of coming down here are. And also what I recognized is that we switched out of New York. So this here was the kind of where they start, a lot of the bots start ramping down at about 8 o'clock. And so you normally see weird price action, start to happen in there. So I wasn't too worried about what was going on here. I posted a thing in the Discord, I think, like I put up here like something like chase me, and then the next image was gotcha, right? So watch what happens when everyone chased the aftermarket long. Okay. Oh, gotcha. Everyone chases this, hits the range top rejection, high time frame rejection, dumps. Okay, so that's, and then eventually got the target. So yeah, I mean, I would scalp this kind of stuff every single day for an income. You reckon BTC? Oh, I don't know what they'll do on BTC first. Whether they go up first or down first, or they've just got it right where they want it. Like this is cake baking. They're building liquidity. So at the moment, it looks stable. Therefore, there'll be more and more longs opening up. And so if we look at that, I don't know, let's have a look at 1-day charts, see how it's looking. Yeah. So you can see people are starting to think it's going up. So unfortunately, if too many people open longs, it will go down first. That is how it works. Will you do a live trading stream? I suppose I could. I don't really. Sometimes, like I say, you sit there for 2 hours in a 3-minute trade. I guess that's what some people. I don't know. What do you think? Would you want to sit there for 2 hours in a 3-minute trade? What I usually like to do is I get up in the morning, I have a coffee. I really need a coffee. If I don't have a coffee, you've heard what my videos are like when I don't have coffee. Um, next level incoherent. And then I will go through all the charts, all of the time frames, and I'll be going through these. And I don't know whether it's like a point where you sort of you just you need to really sit there and think like, what have I just seen? What am I seeing here? What am I seeing here? And you end up painting a picture of, okay, I can see what they're going to do because it's going to be a move to here and then to there, or it's going to go, it always is going to go between A and B, but you just don't know whether it moves to B, then back to A, or whether it goes to A first, then to B. That's the bit you don't always know. But that's pretty much how I like to function. Then I do nothing until daily close. And then normally I will get a couple of trades after daily close, which is usually why I go a bit quiet around daily close. And then after I've got a couple of trades, oh, I'm done. I don't need to do any more really. And um, that's, and then I might if, I get some really obvious entries. There's always things I will have like this. Where is it? Like that's one I'm in. Just a little swing position on the daily. Why? Because it's free of the daily trend. It hasn't broken the trend yet, but it's got high time frame support from back here, sitting down here. So I'll just open a little position and I'll just set a TP at the first level. If it goes there, great. If it doesn't, I'll take the trade more seriously if it dips. What else? There's a good one. Oh, yeah. Sol's going down. There's a good one somewhere in here. This one? Yeah. So this has got a really clean hold. Like that's super clean. No wick. Almost no wick. So I'll definitely take this if it comes down here. 100%. Yeah. Yeah, okay, well, we can do it one day. All I do is I always have these 4 scalping charts, and life has become so much easier with the automated systems. Like I just can't tell you. And I'm not trying to shill them because yes, they will cost money, but wow, does it just make it so much easier. It really does. So I always have a daily. So I'm keeping an eye on the daily. Remembering I've gone through every single other time frame already and I've made a video for everyone and all that kind of stuff. So I've got a pretty good feel around what the levels are going to be on all of the higher time frames. And then I'll be looking at the daily. And so in Sol's case, I would have been patiently waiting for it to come down and tap this around this 159 area, and that's where I'd start to look at an entry for a long. If it went up to the range trend first, I would have been looking for a short, and that's about it. So I know I'm going to go long if it comes down here, and I know I'm going to go short if it comes up here. Then I'll have a look at what's happening on the 4 hour, and I'll see, are there any levels on the 4 hour? So there's this level here. There was the trend, there's that kind of stuff. Then I'll be down here on the 1 hour, looking for the various levels on the 1 hour. And that's, where I found this scalp, on the 1 hour. And then I'll be looking on the 15-minute, going, oh yeah, do I have any trades? I mean, there's so many trades, just every single day. Like, you'd be blown away. Like this is a range trend trade, right? So this candle makes a range trend. This blue candle here creates a range trend based on this historic range base over here. The next one tests it and targets the hold. It's just, once you learn how price moves, you can just scalp. And these tools make it simple because they put that trend in for me. And historically, wow, was I busy. I'd always have to put lines in all over the place. So, that's kind of, why do you not take this one? It creates a range trend. Why do you not long the range trend? Because it closes the candle in a position to be underneath it, to go down. That's what it does. So, that's a 3-minute chart. So you got to be, like I say, you want to find high time frame down is the key thing, right? Because this is going to dictate the overall move, and that's going to be within it. That's going to be within that, and that's going to be inside that. Right? So if you just look at a 3-minute and think my bias is long because I'm on a 3-minute, then you might end up underwater until the daily got down to the trend. And then, a lot of traders at that point, they're like going, oh, I don't want to add to the position, or maybe you've already been stopped out. You can't work from low to high. You've got to work from high to low, which is why I know it sounds really dumb to a lot of people initially, but it's why it's really important to look at like 154-day close and go, well, what happened today? So the change in the data points today is that the trend moved from here to here. Now, that's a blue doji, and you wouldn't believe how tight that doji actually is. Like, there is 90 cents difference, or 80 cents. Is it even that? No, it's like 5 cents, 15 cents. There's 15 cents difference in the price, right? 15 cents difference in the price in the open and close of the 154-day candle. Like, how do you... That's just crazy. Trend moves to there. Technically, it is a trend break to the downside. It is realistic to come down and hit 140. And so you've got to keep that in your mind. Like, if BTC starts to tank, it's got realistic targets that are sub 100K. This has got a target now at 140. So what does that mean? Well, I don't really want to open any really large positions on high leverage and high risk. I just want to stick to my risk. I want to make my 1% a day. But if it goes to 140, I will take the opportunity because I know what's there. I know there's the mother of all trends sitting there, the type of trend that could send it to retest the prior broken trend at 190. It could send it to 258 to test the range top. So knowledge is power. You know when to take a small trade. You know when you could go with a bigger size. The official line is that you're always risking the same amount, but there's certain times when you just know you can hold the trade because you touch that trend, and what's the first resistance is going to be something, a lot higher up. So I think I said a very long time ago, if we ever get to the 3-month, Let's see. Oops, spinning wheel. Yeah, so this was, see this bounce here? That was when we swept the 3-month trend after it was very first created. Now, in another month's time, if the candle closes blue, you'll have that 3-month trend. And you'll have 204. Depends where it closes, I suppose. If it closes over this, so if the 3-month candle closes blue, but over 179, then it would bounce to retest the prior broken trend at like 285. So, yeah, it'll also create a range trend. There to there. If they want to create a bear market, right, this is how they do it. Close the 3-month down under the hold. Okay. Close under 154 or 144 in, actually it's 2 months time, in 1 month, 26 days. You do that, and then it taps the hold and busts the trends. And then what do you got sitting down here at 109? You've got your base pattern. What's the base going to target? Well, it's going to bounce back up at least $40 based on current things. So even if there's a bear market, there'll be bear market rallies. When everyone starts to short and that liquidity gets huge, then they'll bounce off 109 and head back to 150 and stop out all the shorts and have a bear market rally, and then they'll hit the trend. And when they hit the trend from the underside, guess what? It'll go down. So that's yeah. So I pay attention to the high time frame charts and then trade within the dailies. Hence why there's a really good chance we go back to 140. And then you can look for confluence. So if you've got a 154-day chart, which is broken trend, may go down first or it could go up first. So I know 140 to 190 is my biggest range that I can see based on that time frame and first touch supports and rejections. So then let's roll to the daily and go, well, okay, well, what does that line up with on the daily? And well, I got 191 for a hold level, 186 for a hold level. There's all the stuff 184, 185. Break level 188. There's a lot of stuff up there that could reject or be targets. And then what if I go down lower? What have I got around 140? Well, 140. 143 is a hold candle. I've got a yellow closing into a hold candle at 135. Wick is about 137. Maybe what have I got on the weekly? Let's just double check the weekly. Okay, there it is. That 141.350. Break, swept, no retest yet. So then we think, how is it going to get there? Well, the easiest way for it to get there is going to be to close the week under 161. That'll inevitably start sending it in that direction. Now, if I was really bullish, it would be good just to go there now. Go back up before the end of the week. That'd be great. That'd be bullish. If I was really bearish, I'd close under these levels and then dip. Then it might bounce back up to where we are now, but it may not bounce up any higher. So, yeah. You mentioned waiting for an entry on the one-day candle, seeing signs of a reversal. Do the higher time frame trades require more planning? Yeah, so the idea is to try and catch the higher time frame trade. If you want to catch a high time frame trade with leverage, you need to do it in such a way that you are getting the greediest point of the entry, because there are different places you can enter a trade. So if we look for some daily candle somewhere, let's use this one. Okay, so if you want to take a long on this daily support, the first thing you've got to do is you've got to say, well, I could bounce off that wick, I could bounce off that body. My minimum target would be 174.58585. I'm going to put a line here on the top of the body, and I'm going to investigate to find my greedy entry. So I'm going to go from daily down to 4 hour. I'm going to look fractally if there's any untested levels inside there. And straight away I can see this tiny little candle all the way down here. And rule of thumb is it needs to be ahead of the level. Okay, but I can also see that this actual lazy entry is a 4 hour origin break level that got hard closed and bounced. So there was a 4 hour trade back in those days. Look at that. Hard close the candle, long the level, target the breaks. Now, that's how you trade breakouts, by the way. Certain levels can break out because they are the top of a range or the bottom of a range, but other levels can't break out because they're not actually the top of a range or the bottom of a range. So once you know how to identify ranges, you know which levels actually can break out, and that was one of them. So I'm going to come in and I'm going to put my little line here, and I'm just going to put another one on there, and I'm going to label this 4H wick, and I'm going to label this 4H body. Okay. Then I'm going to drop down a time frame to the 1 hour. Okay, and there's nothing better to go for on the 1 hour because the wick of the 1 hour is higher than the 4 hour wick, so not worried about that. I mean, the body's fractionally lower. You could be a real, you could come down to the body here, we'll just call it 1H body. Okay, gonna rewind my replay tool because the candles start to get too big. And then we'll go down to the 15-minute. This has been tested twice, both yellow candles. Got an origin level in here. It's been tested. Got one down here that hasn't been tested. I might mark this. Okay, so origin levels you can work backwards. It's the only thing you can ever work backwards to find the original source. Hold levels you work forwards and down in time. Origin levels you can work backwards. So maybe that one, because that did really propel that thing. So I'm also going to put this on here. But I don't really have any other hold levels. I'll mark this. I'm not going to mark the wick. Mm, 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 mm. Choices, right? Like you've got, because you don't know exactly where it's going to go in the future, but put that on there. Booty. Oh, heck, for the sake of this, let's just put that on there as well. So you got all these levels. One of these levels, it could be the laziest one at the very top, or it could be something down in here, or it could sweep all of them if it wants liquidity, is where it's going to potentially go. So look at the 5 minute. I mean, so you got a 5 minute origin there. You've got an untested 5 minute origin there. So that's got a blue wick going into it, so I'm not interested in that. Okay, let's check out the 3 minute chart. It's tested. No, okay, cool. I'm happy with all that. Okay, so now I've got all my levels. I've got my target. My invalidation will be down under the prior range. So we're dealing with a daily time frame. Let's just fast forward this to the future. I want to go slowly into it when it gets down there. It's probably, I was going to say, it's probably the limit of October 10 and go straight through it. Yeah, sure enough. Bad example, eh? Right, let's just rewind that. It would be the one damn candle that just nukes everything. So you lost this trade. Well, you technically won the trade, but you got stopped out. So yeah, straight through all the levels. Gone. Welcome to trading. Let's just see though what happens when it revisits it. Yeah, come on. Where are we up to? Daily. Let's see if these levels actually mean anything now. Be interesting to tell. Okay, I went too fast. But by the way, this is why I think this candle possibly shouldn't be on the charts, and why I think whatever happened on that day has probably destroyed a bunch of algorithmic market makers, because that's like the price should be moving around to a pattern. That ain't on the books. That's not the kind of thing that should happen. Okay, so I'm just going to rewind this candle one, and let's see. Okay, all right, and let's go down and have a look at our lower time frame. So this was the 1 day wick, and the level one there is the body. Okay, so start with 15 minutes. Okay, so So when it hits this 1618, that's probably about the time that you would be looking for your alerts to go off, and then you start paying a bit of attention. Oh, you, damn you. Okay, and it just spoiled us. Okay, so as you can see, it dips straight through the wick entry, it goes through the body entry, and it tags the 4-hour entry. Okay, so if you tried to be more greedy at this point, you wouldn't have been in the trade. Doesn't mean it doesn't go back. It might go back. Actually, is this trade even finished yet? Oh, there you go. Right, cool. No, it hasn't finished yet. So it's come down. It's tagged the 15-minute level. Body. So all of these levels have now been hit. I don't think it's gone there yet, has it? Nope, straight through. Okay, so if we flip that back to the daily, we're here. Okay, so what you now need to do on this trade, if you're still in this trade, which you probably wouldn't be because you would have got stopped out, is you need to look at the level 1 as the resistance because it's hard closed below the hold support level. So there's actually a bit more confluence with it, maybe getting back up to about that 169 area. So this is, I wonder if it rejected off that. Yeah. Okay, so this is kind of a warning sign in advance. It hit the 4-hour and then it came up and it rejected off the 1. So if you see that kind of thing happening, what it often implies is that the hold level from the past has become resistance rather than support. And that's where you would have exited your trade, kind of anywhere in here. You would have said, nah, I'm out of this. And you would have not tried to hold it to up here. That's actually a really good example to show people because that kind of shows how you manage it and how it can go wrong. So it's also a really good reason, by the way, to just only take greedy entries, because if you take a greedy entry, you didn't enter up here. You entered down here, which means when that flipped to resistance, you would have actually been able to get out at a profit rather than at a break even or a loss, or had to pay for fees, or maybe you just got the top, and snuck out over here. But also, if you want things to be super, super safe, you just trade the greedy entries to the 1. Then you don't need to know whether it's going to flip because you haven't bothered to try to go to the 1618. So there's a few different ways you can manage that. So all of these levels, which were once support and creating these bounces, you'll notice that they've now become resistance to keep the price down. So you can't get back through because they've all flipped. More of a reason for it probably to have to go to something bigger. So for it to get back through that daily, it probably does have to go and bounce off something a bit stronger. Unfortunately, I keep finding reasons to go down. What could it do? It could go back to that. Sorry, that. No, it's already done that. Oh, yes, of course. So if you lose that level tomorrow, definitely more down. Otherwise, that level is going to try and bust back up through there. Right, chat. Maybe we should find an example that didn't get destroyed by October 10. It is possible too that that work completely invalidated every single thing in that whole candle. So let's try a different example. Let's try this one. Kind of want a bigger one. Could try a short. Okay. That tapped almost instantly. Never been back up there, have we? Try to find you a good example. Yep. Okay. That one? Yeah, let's do that one. Okay. Oops, not indicators. Replay. What's going on? Oh, cell's diving again. Okay, so let's look inside here, but we want to look below there because that's already bounced off something and already tested something. So take this as our body. Okay, go down to the daily. And so we've got this 106, got this at 119. One-day entry. So if you're doing a monthly, it's not always that realistic to expect it to go down really, really, really deep inside of there. So you might mark out your dailies or your weeklies. So 1 day. Actually, what I should have done is gone to weekly first, but okay. And you've also got to look at your range trends as well, because that could be an entry, that range trend. Because it hasn't been retested since it was broken. Yeah, okay. So let's go monthly, back to monthly. Yeah, so definitely hit the range trend. Went a little bit lower. Not that much lower though. So where did it go to? No, it pretty much just was the range trend. Yeah. So yeah, looking inside a candle, finding the lower time frame moments inside the candle and looking at them for your entries, but then basing the actual move off the whole candle, which is that one. And so it managed to go up and tap level 2. And if it closes over 170, then it can probably continue. Yep. And if it closes over 206, yep, down. So even this range is kind of being tested now as we speak, really. If it closes back over that 170 for the month, then it would probably try to target the next level up or the hold level here. And if it closes over the 206, then the 242. But it'll be establishing a new range top there. Anyway, what's going on? I sit in dread for longer with my own. Yeah. Okay. Yes. Yes, it's always good just to sit, wait. Particularly because like if you've watched a few of these daily close videos, and then you've actually witnessed the daily close, they will always be really close to a level of polarity. So you, sometimes it's in like the last minute that the price either moves up or down by the few cents that actually make a difference to what then happens. So you got to look at it and go, well, if it does this, then it means this, and if it does that, then it means something different, and then you just got to wait for the close because every every moment a candle is open is inducing people. And you look at that the 77-day chart that I showed you. The candle is open for 77 days, and inside that 77 days, it pushes up through a resistance trend every single candle for four times. And then somewhere in there, after it's got enough longs in, looking really bullish, it pulls back down under the trend. And it's done that 4 times. So you can only fit 77 into 365, roughly that. So for a year, it's basically gone induce, 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 jokes, liquidate, induce, 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 jokes, liquidate. That's how markets work. Um, new people, make sure you hit the like button. like. Yeah, my brain is an indicator. Just lots of practice. Background, big business, uh, property development, and basically business ownership. Yeah, it's also really, really helpful too, guys. If you see something in the live stream that you actually think is really worth people knowing about, and this is not a shill to get you to do comments, which do help, by the way, um, but because there's no timestamps on these. So if in the comments after the video, if there's something like really important, look at your watch and just note how far in we are, and then just chuck the timestamp in the comments afterwards. I don't think the chat shows up afterwards. I don't know, but having it in the comments means that someone who comes along and looks at the live stream afterwards, they'll be able to skip forward to whatever you thought was good, and you have a better idea too of what, you know, what is good than I do, because this is just stuff I deal with every day. Um, let's see. Yeah. Yeah, so did we just bounce off something? We probably did. Definitely broke some 15-minute ranges. Okay. Oh, the time. Okay, there we are. That's bearish. Closing back under that level. Trying to get back up or more down. This is a really good way to try and break a trend. So you time it, or they time it, so that it just closes underneath a horizontal level when in close proximity to the trend, so that it can try to push through it. And it's in such a way that the other trend is now on the top side, so it can't bounce off it as support. So it's kind of got a, if buying pressure doesn't kick in, that just keeps going down. And it's entered the body of the whole candle this time, but this is kind of the third test of the whole candle. So it may get it back up to 160. It's got 13 minutes, and if it's still down here in 13 minutes, then it's actually under the prior broken trend, which is a little bit hard to see, but the trend used to run through here. And then that makes this a deviation of the prior trend. And then rejection would be from about 160 and then continuation to the downside. But yeah, they didn't shift the trend, so there's no trend to bounce off to target the hold. So this is quite bearish structure. Like if they're trying to push the price down, this is how you try to push the price down. Good little algos. Yeah, let's have a look at BTC. Where are we? Chart. So you're watching 30-minute chart. So there was a hold level in there. It could have already bounced. So you gotta check the wick. And put it in there. And let's just check that on 3-minute. Yeah, so it already bounced off the wick. So wick to target. So if it bounces from the wick to the target, you typically don't take it. Just, it's not that it won't go there, but it's just about risk. So that's wick to target. If you're looking for a refined entry, which is, you have to be pretty quick. So have a look at the 15-minute. There you go. Okay. So instead of taking the trade on the 30-minute, which may or may not succeed, you could look to take whatever range was created by this little candle down here, but it's probably big. Yeah. So within this candle, you've got a range, so you could have just laddered on these levels and TP'd at the top. That trade's done. It's a pretty small trade. See if there's anything bigger, eh? Not that. Okay, that could be something. Don't really like that. Maybe. So hold levels can't work back in time, but origins can. Remember how I mentioned that? So if you test the break level within the range, it can technically create an origin level. So this pattern here, where that candle was wicked into and then it dumped. And then we had resistance here, support, 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 big bounce. So that's very indicative of an origin level. So that lines up with the top side of the 8-hour range over here. That's pretty accurate. Then you've got kind of a hold level in there, pretty much close enough. Hold level in there, almost identical number to the dollar. So the question is what's here? No. Guess it's just that hold level. Yeah, that candle's got a lot of confluence. So that could be a range. What the heck's stopping it? How does BTC look right now in relation? It looks weak. That's pretty much it. But it's also part of inducement. If you want to go up, you make a token look weak because then everyone shorts it. Rejected off to ABC. Let's see. Okay, we'll look at mask in a sec. I'm still kind of just staring at this, thinking that this actually looks like a path back to 105, 110, 114, 118. Starting pretty much down here. The only thing I don't like about it is the fact that this is a blue candle. Because generally speaking, the very first hold of a range is not tested like this. So if it closes up, if it closes yellow in the next 2 hours, if the market starts pumping in the next 2 hours because then this becomes the base of a range, almost certainly. It's a bit risky to take a trade on that straight away, but it's failing that, it's probably just doomed to fail. Yeah, but it may come up here and reject off this 105. So this is that crystal ball game of ranges. The first candle of a range should not have a blue candle closing into it like this. If it does, then the first level of the range, which is meant to create the base of the range, will probably reject, and the range will probably fail. Lots of use of the word probably there, but that what this sort of says is in 2 hours or so, we will most likely, didn't use the word probably, we will most likely know whether this is going to fail, even if it does pump, because it might create a hold level to the downside, swing up here, reject. Tricky, tricky. Okay, let's look at mask. Mask is that new MetaMask token, isn't it? Ooh. That's crap. Well, on that time frame, it's crap actually. Let's check the others before I jump to a conclusion. No, no, that's not good. That's not good. That's salvageable. It's got to go up for 3 days, then up higher for 3 days, and then back down, and then it bounces. Salvageable. That's bad. Look at the pumps that you can get on shitcoins. Same structure. Check this out. It took off early. It was so excited. Here's the top of the range. No, none of those. So it was that. Break level. Break level. Check that out. Same pattern as everything else we've talked about. 144. TP2, 218%. It's not bad. Yeah, ARK played out. That was a good trade. It was just well, it's just like I say, we're in a market that's not like the prior cycle. We're in this whole cycle is just rotation. So they'll pump money into one token, narrative it, shill it, whatever, however they do it, send it up, and then they'll harvest people, and then they'll dump it down, um, and then they'll move on to the next one. It's just money rotating around because there's just not a lot of new money coming in. Or maybe they've just got smarter. Maybe they realize they don't need to pour fresh money into it. You just drag money out of it and use that money. Although eventually people are going to run out of money to trade with. So if you were trying to find an entry on mask, you've got to let it really bottom first, and let's see if we can find that. Yeah, it's either got a bottom or it's got to recover. So if it was to recover this weekly range, that's still good. Like it can get back up above, bounce off it, and go up. That's still fine. let's see how long has this been around for? We were looking at that. Okay, so yeah, you could even watch this on the monthly. It's been around long enough. Oh, beautiful. Can you imagine knowing what you've learned in this video and shorting that? Because it's just exactly the same in reverse. What do you see down here? Um, Yeah, so you could keep an eye on this on the monthly. If it's a deviation below here, maybe this gets back up above the level, taps the level, and then target this. That could be a 280. And then the next TP, if it gets over that, would be that one, and then that one up there again. So yeah, keep an eye on that for the monthly. That would kind of imply we're going to have an extended cycle though, so I don't know. Failing that, this thing's just dead. It's just going to bounce off that and go find a new death somewhere. Let's just see if you can get a short-term scalp on it. So that's your current. What is it? She might not be. Oh, that's tricky. This might create a daily trend. Sorry, that's a monthly. Monthly, maybe. Has to close for the month. I'm getting tired. That's month. Weekly bounce. It's pretty crap. Created a trend. So do we have a daily? You've kind of got to catch these things relatively early, like close to close, because you can see it's bounced off it a few times, but it's daily is there. So it didn't quite tap the daily, it got really close to the daily. That's kind of, Binance does sometimes have these little funny gaps like that. So, you know, if you were trying to take a trade on this, your trade would have been a bit earlier today. You would have worked your trend down like I just did. You would have known that the trend is going to move from here down to here at the close of the day, and then you would scalp the trend there. And that would have, well, actually, that was yesterday. There'd be no other trend in that now, but let's see, do we have a 4 hour. No. No, so it may still come back to that trend. This is all stuff pointing at a double bottom. I just keep finding stuff pointing at a double bottom. Is there something you look for when you know something isn't salvageable? Yeah. Trends facing down, like this one. You can scalp them, but they're still facing down. So it's not until it reverses the trend. So our daily's down here. Okay. What we want is we want another day of up and then a day of down. So that would mean an accumulation range has been created at a very low point in price. Yeah, this thing's weak. Yeah, so you want to see another day and preferably up. You don't really want that to be your trend because then it can just open on the wrong side of the trend. And it's not a range if it's just single candles. You need 2 candles to have a range. So yeah, even if it double bottomed and then got a better bounce, because it should be targeting this. It's just weak as anything. It should be going there. Yeah, 9% move. This is the problem when BTC is just so gutless. If BTC was not acting like a little weak blah, then that would be up here. Okay, so yeah, and then you want to see the new trend come in, something like this, whatever it might be, and the hold level's been tested, so then it touches the trend and then it hits the break level. And then if it hits the break level, you TP because that could be the range top and it might never go higher. But if it closes over the break level, then you continue the process. Yeah, so I guess you just have to to answer the question about is it salvageable. You're looking for things like the trend is reversed, so therefore it's stuffed. If your support trend is facing down and your resistance trend is facing down, it's stuffed, right? And it's not unless it can turn it around that it will actually come back up. The other things you look for is you look for basically the highest time frame you can. So the older the token, the higher you can go on the time frames, and you look to see almost like a history of how it's moving. So I know that this was a range top. Okay. And I know that that was not a range bottom. So where is my range bottom? Well, it's got to be in here somewhere. It's not that. Let's see. So what I'm doing to qualify this is I'm just looking at the same pattern. We hit the break level. We failed to get back to it. We hit it again. Massive rejection. That's our range top. Okay. What you really should have been is just short on this token from up there. Where could it create a bottom? Well, it could create a bottom of this, but it didn't because it closed under it, so it's not that. Could have created one off that, but it didn't because it closed under it. So all of these are becoming resistance for the short on the way down. And that, it could have created off that. It sure as heck tried, but it closed a blue candle underneath it, so that's resistance. Now it's here. This is where it is. Okay, so at this point in time, it's got 1 month to get back up above that line, close a candle without touching the line, and then it's going to be an epic trade. Okay, but if it can't do that, it's just going to close a blue candle, it's going to lose that level, and then it's going to have to move a trend, and then it's just going to keep going like that until eventually it can create a base. And to be fair, the top has moved as well. So like that was your range top up there. It's been compressed to the downside because of that. Um, it was so weak that even the rejection of it was front run. So it got nearly to the line. And so that would have been your first epic short. And you would have TP'd at the break levels. That would have created all this. You would have re-entered the short here. You would have TP'd at this break level. You'd now be waiting to see if it closes under the break level or not. So that's a very high time frame position. And you can't magically take that on huge leverage. But what you can do is you can reallocate your leverage. So, which is kind of like an advanced thing, but if you, the amount of money you have in your portfolio, initially, as an example, you could start this trade as a one-to-one. And if you're on a centralized exchange, it's much easier to do what I'm about to say. But if you're on a DEX and stuff, it can be a bit harder, but or maybe not even possible. But if you'd shorted this level with a really, really, really low leverage position, even like a 1x, okay, you short it with a 1x, and then after it created this hold level here, which is like 2 months later, because your target is still, down. What would your initial target be? Here, actually. Sorry, you would have TP'd. You could short here at really low leverage. First TP would be here. So you've already taken your first TP. At that point, what you can do is you can increase the leverage on the position, which frees up your capital, allowing you to then use that capital for another trade and converting this to a high leverage trade. But you can put your stop loss in profits because of your partial TP, or you can put your stop loss back above the entry, and you now have all of that money left in your portfolio to open the next trade. Those are some of the reasons why leverage exists, not the reasons why a lot of people think leverage exists. So that would be how you would use leverage on a really high time frame. Start with nothing, wait for the structure to create, take some profits, increase the leverage, put the stop loss there, job done, let it ride, target the next break level down here. You'd then be down here. Okay. Yep. Zcash. Yeah, I agree. The majority think it's over. That usually means they're right, but the market's still going to get them. So, when everyone thinks it's over, step one. When everyone so believes it's over, they start shorting. Step two. When everyone starts shorting, you have a bear market rally. Step three. So they get liquidated. Yep, we'll look at Zcash. Yeah, there's huge opportunity in the poo coins if you know what you're doing. No, I wouldn't short mask at the bottom. I'd wait a month. Or just find another token that's, just find something that's got a better trade opportunity. All it has to do to pump 300% is come back up for the month. Preview of your indicator suite. Yeah. So we'll look at, actually, let's do ZEC and that at the same time, eh? We can do that. Look at that. That's awesome. Okay. Do you want to see the funny thing? Hello, darkness, my old friends. There's your line. Oh, Look where your break levels were. Look at your history. This is just beautiful. Okay, so this whole candle, fully tested by this sweep, not going to stop anything. That break level would be a target. This whole candle, fully tested by everything, that break level would be a target. This whole candle, tested here, but that's not a proper test. So you'd take a partial. It'd be pretty early. You'd take it about there or there, somewhere in there. We'll just put it on the lowest one. Okay. Now, what about range trends? Well, that range trend broke and shot up, so whole candle stuffed. We got one in here. This is probably going to find a good position for bottoming. There it is. That was where accumulation started. Just note the subtle change in volume. See this? Until you get through here and the volume starts to increase. Cheeky. What's going on? What's going on through here? Well, they're accumulating is what they're doing. Very big people building bags very slowly while everyone thinks this is a zombie coin. What happens through here? Sudden spike in volume. Last liquidations. Last of the bags being transferred to the bigger players. There's your bottoming. There's your accumulation. Failed to get back to it. You start loading up. This break level was already hit by this candle, which created the high time frame. That break level isn't going to do anything anymore. That'd be a partial TP. That'd be a partial TP. This stuff wasn't created, so it's irrelevant. This whole candle has been wicked through here. And then when it closed over that break level, bounce. And she's really in price discovery now. So there are things you could do. So firstly, going to look for a up-facing support trend that could reject. So that's one of them. That's another one. Okay, so that's why it's here. Okay, that's why it's stalled here. So at the end of the month, if this pulls back down under that trend, taps the backside as resistance, that could be a really good short. But if it closes over that, you really could see an $800 Zcash. Would that not make everybody cry? Well, they've been waiting for Sol to go up for so long. Okay, so now let's look at the indicators. So there's a few different parts to them. So you've got, I'll start with hold levels. So hold levels basically just find untested hold candles on the chart. It's going to be sad if Zcash goes back to $38 next cycle, but that's the only untested hold level that's there. And you can configure, you only want to see certain percentages because you don't want to look at things that aren't tradable. have you considered being a whale doing whale things? No. Suppose I could flick off a couple houses and just start moving tokens around. No, not interested really. To be honest, I hate it. Morally, they are just, for every buy there's a sell, right? So, and they are, if they're winning, there's a lot of people losing. So, yeah. And the only way really to beat them is to be in and out. This cycle particularly is, or just time the bottom, which is not always that easy. But if you bought $20,000 Bitcoin and just held it, sold it at 100K, then and rinse and repeat that after a few cycles, yeah, all good. But if you want to trade against whales, you've got to understand how they manipulate the structure of a chart. I don't like the word manipulate really. It's not manipulation. It's effectively what they will do is they will ensure that price is in the right place at the right time to get a reaction out of every single algorithm out there, every single bot out there. They'll suddenly go buy or suddenly go sell, and they'll use that to push price into liquidity, and they'll use the liquidity to open their positions. And it's the only way you can open really, really large positions. It's like when James Wynn kept advertising where his stop losses were, and you could go on Hyperliquid and look where his stop losses were. It's a great place because then you go, okay, well, if I wanted to open a $100 million position, I need to open it into $100 million worth of stop losses. Otherwise, I'm going to create a really big spread. And I don't want a really big spread. I want a premium price, So, yeah. Anyway. Yeah. So you can set whether you want to know about them or not based on the size of the hold level, labels, that kind of stuff. Various different types that you want to see, because there's a whole bunch of different types of hold levels. Show pending. You can make it show active and completed ones as well if you want to. Liquidation calculations. What type of alerts? So do you only want to be alerted when you get one type of hold level? Do you want to be alerted on all the different types of hold levels that get created? You can put a price filter in. So if you're dealing with low time frames, you might not want every single hold level from $300 down. You can also just do that. You can set that for your daily range, because if you're trading within the daily range and you know what your daily range is, you can set the price range as your daily range and just ignore everything outside of your daily range, because you're not going to go there, right? Because it's irrelevant. You're not going to leave the higher time frame range if you're trading on a lower time frame. Colors and stuff, which there's someone working on that at the moment, like what's the best colors and things to have, how you want them visually displayed. Yeah, so that's hold levels. And kind of the purpose of it is that you can come in here and you can go alerts. And so you know when you're getting hold levels created, when they've been activated. Is it inside the daily hold? Cool, you'll get an alert. You can start looking for your entry. So that's one. Then there's range trends. So show touched, show broken, untouched. So that means they've been broken, but they haven't been retested. Show broken, touched. So that's like basically every single thing on the chart. A lot of cases. Maybe you only want to see the support ones or the resistance ones. Channels, because range trends can create price channels. And then the inner of the channel. So there's a bunch of options in there. If you turn all this on, just to give you an idea. So you turn all this on, there was your target. You see how it was basically just completely free air when it got into that gap? So, it was just going to go. So that's price discovery stuff. Okay. Colors. I'm not really good with colors. Styles. Alerts. So you know when a range gets created. You know when it's been first touched, you know when it's been broken, and you know when the broken one has been retested. All alerts that you can receive. Um, how far back to scan and bars and all that kind of stuff, because this, do you want to see how you break TradingView? Just do this, and then go like 1 hour chart. Wait for it, wait for it, wait for it, wait for it, see if it crashes. There are just some limitations to do with loading time and things that you just, if indicators, hey, as you can see, there's a lot of range trends. Okay, so the tools are sort of designed to help you, but you've still got to make choices because, wowza. You see this down-facing one coming through here? This was eventually going to get retested because it was broken somewhere. And, oh, that's a channel, I think. Yeah, that's a range channel. So it broke out of the channel. So this was channel, top channel, broke out of the top of the channel, retested the top of the channel. All right, so that's range trends. Golly, what I want. I don't want those. Show broken untouched. Yeah, want that. Okay. I'm just gonna make some monthly. Okay. Break levels. So this has got break levels, origin levels, broken break levels, broken origin levels, broken but untouched, e.g. need to be retested sometime. Okay, these are quite important because price typically retests ranges. It might be like in the case of BTC's drop to 102 the first time, that was a monthly range retested after 2 months of being above it. You know, so it's important to know where these are because they can be targets and they can also be entries. Pure levels and non-pure levels. So pure levels would mean that there's just 2 candles, and that's a true range. Non-pure means there's more than 2 candles, which means you should check a higher time frame to see if that range exists on a higher time frame, because you might be trading too low for the time frame that you're actually in. And then stuff that's hit by own range, right? Because like I say, you can create origin levels within their own range. So I would normally have broken untouched turned on. Not too worried about the ones that have been touched from both directions. But when you first start, the cool thing is that you could turn off everything and just turn one on, look at the levels, and you will learn what it means. You know, just by looking at it, it's so easy. I mean, not everyone's a visual learner, but certainly I think that would help a lot of people figure out levels. Alerts, of course, because you want to know when these things happen and they're created. History, mostly for low time frame stuff. There's options in here for just deleting stuff out of the storage because of TradingView and how many levels there actually are. Colors, widths, labels, how far across they are to the side, how you want them. Range filters. You can enable range filters so that you don't get like 100 levels above and 100 levels below, which is irrelevant. I just usually run it on like I want to see 15 levels. I'm not terribly worried about that. That's pretty good for low time frame charting, and of course everything's going to show up on high time frame, which is not really the problem. So I would get, in future, once these things are all done, I think I'm just going to have 10 tokens set up. Everything will be set on them. and you'll get your alerts when they are building the base of a range, and then you'll know that you've got a decent trade coming and it's time to go. Okay. Advanced time array trends. Oh, we'll do that last. um, okay, advanced hold level detectors. So advanced hold levels are set out differently because they can be completely eroded and just not work at all. Um, talking to one of the devs, there's probably going to be a quiz that you have to actually answer before you really get into this, because we don't want you to wreck yourself, right? So you need to know how to look inside. There'll probably be like a video or something you can do, and then there'll be a quiz, and then this indicator will be held away from you because we do not want you to start building positions inside eroded hold levels that are not going to play out. Okay, so that's that one. Of course, there's all the different options for alerts, etc., etc. Block high risk. So basically, try to not tell you about the ones that it can already tell that some of them are pretty bad. So show pending, show active, show completed. That's like, I bet you this has probably got, so this has got some that oh, that one played out. So I mean, this is kind of like gives you an example of a high risk hold level. This hold level here, it's high risk. Target's going to come here. So we know that after its creation, Zcash is going to go to $70 from 153. But look how high it went up into the level before it eventually found its way to $70. So you're going to have to prove you know how to find the entry inside here, because we don't want people entering at 150 something, the price going up to 300 and then coming down to 70. We want you entering at 300 and then coming down to 70. Okay, so that's what's that? You're putting an airbag in it. Yes. Yes. Yep. There's a couple other things being built, like proper trend change indicators and stuff. And there's been discussion around like, showing the ROI and stuff like that. And pretty much everybody involved is like, no, if you're going to show a return on investment, it's going to be the absolute worst use case return on investment, or nothing at all. And that's kind of the mentality behind this. Is they're tools to help people trade properly, not to, not to create false hopes and dreams. Okay, trends. Oh, time saving. This is the one I love the most. If I had to just pick one, it's this. Drag a trend, chuck it on a candle, and it does all the work. Okay. Kind of cool. You notice your trend was failing. Uptrend. Uptrend. Weaker uptrend. This thing's dying. Like, you can tell that just by dragging that anchor there. You can also tell where the proper tops are versus the sweeps. Like, this is actually the proper top. This was the sweep of all the liquidity. So, yeah, which then makes that the proper top, which then makes that your breakout candle. Hello. See how that works? Imagine knowing that by dragging it back here. Anyway. And of course you can do the same thing for sport. See the curvature change? See the first curve change? So if you use these things in Confluence, you will be able to do what I do, because you can drag a line over there and you can see the curve change. And therefore, you know, based on some very, very, very simple things, number one, the angle of the trend is changing. Number two, you've created a support level that is going to reverse the move. Rest is history. And you know where the trend broke. But you actually could have got an entry down here. So that's... You also know how far away the trend is currently. So if it comes back down, it will it'll be bad. Many tears if this comes back down. So that's that one. I have been playing a little bit with this just in the last couple of days about anchoring on higher time frames and then using it on lower, and it does seem to work, but it's not by design, so I don't know. More testing required. Okay, and then you've got, and of course you can have alerts. So you know when trends are breaking, you know when trends are changing, you know when candles are on the wrong side of trend, you know all that kind of stuff. So that's all in there. You can have it actually doing pre-close previews as well. So it when you're scalping, it's moving the trend around and showing you what the next outcome would be if the candle closed where it closed. Not that I use that. Funny thing is they're kind of a bit of a, I don't know. I can't imagine people are going to have these things forever, because once you've used them long enough, you'll just see it. Like there's already people in the Discord and people I've been dealing with for probably nearly 2 years now. Some of these guys I've been talking to, and they can now just see it. So you just look at a chart and you go, oh yeah, level, all these levels. I know what's happening. Okay, and then you got advanced time array trends. So same sort of thing as normal trends, except it can be fixed. It can have 2 anchor points fixed on a higher time frame, and then it can automatically array the trend from whatever you set it to. So, for example, you could set the start on a weekly. You could choose to set the second point on a daily, and then after setting it on a daily, it would not adapt the beginning point as you ever change to any other time frame. It would just hold those on those time frame, and then everything else would adapt thereafter. So I haven't done too much playing with that one yet, but I really should. But it's kind of it's designed to do the thing that I would do, where I would start with a trend on a higher time frame and I'd work it lower to find the more accurate trend on the lower time frame. So a bit more advanced, that thing. So that's it. There's also, not that I have them on at the moment, but there's also, I think Blue showed something in the Discord the other day. So he's working on the proper fixed TTP reversal ones, which do whatever they do. It's not my style of trading, but it works. And so there's going to be those. And yeah, there's also the basic trend change one, which so the trend change one basically does everything I've just shown you today, but it identifies like the evolution of time. So it can see that a level has been hit and that time is now building in the opposite direction away from that level. So hence finding the, because you know how I said you can go backwards in time with origin levels. So somewhere down in here, there's probably something lower, and the exact moment at which the trend begins to change. Let's just see. Let's see. So we've got our monthly level, but down below the monthly level, there will be a daily, which is there, and somewhere below the daily, there will probably be a 4-hour. going to be here. And somewhere below that, there will be a 1 hour. You probably get the point, right? But it's 1 hour might be in here. There may not be a 1 hour. Or if there is, it's just too hard to find. 4 hour. Yeah. Okay. So if you look at that then back on the monthly, your trend started to change, and so the monthly level gets created and then time starts to reverse. And you would have been getting entries at $18.81, all in confluence with those trends and all that other stuff. And sweep, and off it goes. So that's kind of yeah. So there's, how would that actually look? It just looks like a line or a bunch of candles, and it just has little buys and sell signals. So that one's the last thing, trying to get it right. I think it made about it like totally, completely sandbagged, no leverage. If you took the worst entry and exit associated with every signal, I think it made about 500% in about a year on your bag. So that's the kind of thing that we're just trying to get. Yeah, but it would have got that. Okay, that's it. Hopefully that explains what's going on. Looks like Shib or Bonk here. Yup. It's been ages since I've looked at those. Let's see. Yeah. It's got a lot of decimal places, doesn't it? Okay. All right. Man, look at that. Pattern, entry, TP. Range top. New range top. Untested. Possible bottom. Not that one. Okay, so you see how these things fail? Okay. Tap, 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 tap. Close under, dump. That little candle there says you are going to lose that range. And when you look at the history, hold of the range, tried to recover it, couldn't do it. That ain't going to work. This has been tested. Pretty much everything back in there has been tested. The only thing that could potentially hold it up was going to be that. And it worked through that. Let's come back up. Now, what you want to see is you want to see, in this case, a month. You want to see a month not touch that and then it could hit that and have a rally. So that's if there's going to be an alt season, this is the absolute best place to do it from. But it's a big if. Check it on the weekly. See if we've got a weekly rally in here, maybe. What's this? That already started that. So there's a couple of levels there on the weekly. One of them kind of just being where it is now, and the other one being this level down here at 8019. Unless it can recover this level by the end of the week. Getting back up over and recovering that level could then bounce it up as well. But it's, yeah. So if it hard closes underneath it, closing blue, you might get a trade between these levels, which could just be a 8% to the start of the whole candle, 16% to the rejection and retest of the level that's been hard closed. It may dip first, bounce up, so you might end up with a 26% move at most from that. Let's see where our trends are. See? Yeah, it's got all the levels. Never gets old. Do you know how many years I've drawn those lines? 2. Little things like this, though, I don't know if there's any way to fix this, or maybe it's just stuff, but sometimes clicking on it is tricky. Oh, there you go. There is an option up here where you can do this. Oh, drag that down. You can come in here and you can go reset points, and then just take the point to where you want the candles to be, and then it moves the anchor. Yeah. This is kind of the toughest thing right now, is that where the tokens actually are, there, a lot of them are just very much trapped under trends. So the way the price has been moving, it's just stuck. It needs to, not only does it need to hit a horizontal level, but it needs to hit a horizontal level and break a trend. It's pretty hard to go up unless it breaks a trend. Okay. Right. And BTC is still just going sideways. It's building cake. Sol is pretty much doing a similar thing. More cake baking. And looks like it's trying to break that range trend. So yeah, that's pushing back below the levels, bouncing around. So the 4-hour trend might break in an hour. Yeah. So it's back under the prior broken trend, back under the prior broken trend. And the interior trend looks like it's going to break, so it should send it lower. It's got to come back up in the next hour or it's going lower, that's for sure. It's a pretty bearish looking candle in a very bearish looking place to close. So 1 hour, got a range trend it could bounce off. Still hasn't really lost the 1 hour range because it hasn't hit this break level down here yet, so it's still technically in this range. 7 minutes, this trend will shift. Could give it a little push, unless they close it with no wick. But it's also losing this interior range, so if you're like, ranges often get built like boxes inside boxes, so you've got this range, which is just a component inside, you know, whatever's here. And if it closes a blue candle under here, it's trying to break that little interior part, and then it'll be down in here. And if it can break that, then down it goes. There's also a range trend there, which is in the development section of the indicators. So, because a yellow candle into a hole can't create a range trend, but a blue one can. Actually, sorry, it's not there. It'd be there. Oh, I see. That's what's bouncing off. So, so it's got to be the first blue candle into the hold. Yep. So the hold is pretty much flipped into resistance. The trend is pushing on it. It's stuck in this little wedge. When this standard trend shifts to the bottom, it might give it enough to pop it back up to test, you know, anything up to about there, but that's looking pretty bearish. Yeah, we do, like, just overall, we're at the very bottom of things at the moment. Yeah, we don't really want to lose these levels, and I think it would be kind of unlikely that we do. I think it's more likely that they'll sweep them because there's just too many people have gone long in the last 24 hours. So it's very possible they'll sweep them. that's not really moving enough to scalp it. Yeah, and that's not quite breaking it. It's just paused. So that candle's not actually breaking the trend, uh, but it's back under the resistance. Great way to accumulate. So if you're a whale and you were to spend enough money or sell enough tokens to cram a price into a particular place like this at a particular time, you would be able to accumulate quite nicely with a nice tight spread, whilst all of the algos are like, no sell, no buy, no sell, no buy, just like compression, and then crack it out of there one way or the other, depending on whether you want to go long or short. I'd love to know what software they use to do it, because I'm pretty sure they're not sitting there on an exchange going buy, sell, buy, sell, buy, sell. Yeah. Yeah, what are people talking about? Okay. What was that 8 hour we were looking at for was it BTC or Sol? This one, BTC, still there. Oompa. That's all your levels. No wonder it bounced here. Hmm. Good morning. Um, how come sometimes a candle hard closes a range, then it jumps back into the range, something on a higher time frame pushing back? Yeah, so yes, basically yes. So you can hard close out of a range and then be pushed back into it by some form of resistance sitting just above. You can also, and that's also the importance of pure ranges versus non-pure ranges. You might think you've hard closed it, but the range exists on more than one time frame. So um, trying to think if I have do I mentally know of an example of that? Do I? No, but I could probably find one. Let's have a look. See what we can find. Okay, so let's start with something lower, because all those kind of problems happen when you are not aware of higher time frames. So that. Okay, so let's just find where price. Okay, start here. That's a daily, so we'll just go 1 day. Now let's have a look on something lower, like a 1 hour. Okay. Okay, so that level there on a 1 hour is also a daily level. Okay, so if we come across here, one, two hard closed candles. So total of what? 1, 2, 3, 4, 4 candles, definitely above. Nobody's touching. 3 of them are technically hard closes, and price fails. Why is that? Because what we thought was this 1 hour range up here is actually part of a daily range. So to really hard close that level, you need a daily candle over the top of it, not a 1 hour candle. And so a pure range would simply be 2 candles. Whereas this is a whole string of candles with all these little hole candles in between. And it's actually the combined amount of all of this is what makes it a daily. Also, just a tip, look at the time frame down the bottom. So if I hover the cursor over here, down the bottom it's 0000. So that candle opened on the daily. So straight off the bat, I should look at that candle and go, is that a 1 hour range or is that a daily range? And then if I go to the daily, I lose it because, where's that line? Okay. And then I go to the daily and I go, oh, damn, it's a daily range. Did I close over it on a daily? No, I didn't. Did I close over it there? Yes, I did. Did it sweep down to the hold? Yes, it did. And did it pump? Yes. And this is normal. If you're going to break a range, it is normal to sweep liquidity from the range before the move. So sometimes when you get the hard close, you look to enter on the range or you look for an entry just below the range. So that is normal. But that's because it's a daily, not a 1 hour. And if you just zoomed in on the 1 hour chart, you would end up thinking you've broken a range and you'd end up in some ginormous big dump. Does that explain that? So you can do the numbers in your head, but if you're on a 1 hour and this is kind of like a bit like fractally viewing timeframes off any chart. If you're on a 1 hour and you're hovering over a candle and it happens to be like, say, an 8, then maybe it's an 8 hour level. Maybe it's like if there's more than 2 candles and it's 8 o'clock down the bottom of the screen there when I hover over it, maybe it's an 8 hour. It could also be a 4 hour. Anything that kind of fits with that closing sequence is what it could be. So, and then you just have to check the other time frame. Or if you're building the charts, you just build them from the top down, which is the best way to do it. Okay. What happened today? We didn't quite close above where we really needed to for BTC to have hopes and dreams. It's kind of in the middle. It could push up, reject down. It could go down first. Just going through a bunch of different charts today, just randomly. There's a whole lot of signs that a lot of tokens have left support behind for potentially a double bottom. We know what range we're roughly in the short term. We just don't know. We just don't know which way it's going to go first, like always. So that's about it. But we know what to do if it goes up, and we know what to do if it goes down. And we found a couple of tokens that are either just going to completely die in the next month or so, or they're going to have some huge pump, which adds a bit of interesting thought around whether there is an extended cycle, because they can't do that large pump for maybe 2 months based on their structure. But yep. So yeah, and we've gone through a whole bunch of postage time. Gone through finding bottoms, how trends curve and change direction, indicators. I hate calling them indicators. I hate indicators, although they're technically indicators. Trading tools. You still got to know how to trade. We've covered over a bit more detail on origin levels. How oddly that October 10 wick almost just shouldn't be on the chart in some cases, because there are some levels that are getting respected that shouldn't be, but if that wick wasn't there, they would be. It's a bit of a funny one. Quite a bit of stuff, actually, quite a bit. And I see one timestamp. Yeah. Yeah, they're tools. I agree. They are tools. It's when I first started trading, I looked at all these YouTube things and all this kind of stuff, and there was just all these people out there that this is how you use RSIs to win every time, and all this kind of stuff, and back tested, all rubbish. It's just all rubbish. You can use them in Confluence, and there are some really good people, like Blue is really good, and he started doing a lot of what I do as well, and you can see it's just made him better and better and better, because now you've got all of your RSI divergence. You learn about that, you know roughly when things should be reversing, and then you know where to look for the actual structural levels, because you've now learned how structure works, and you put all that together, and you're going to have a pretty good chance as a trader. And now we're going back up again. Oh, the fun of it. Baking cake. Yeah, right. So, yeah. So 1 hour trend shifted. It's on the wrong side of the trend, but doesn't mean it has to break it. Yeah. I mean, if they're going to go up, they need to pull that 4 hour up. If they don't pull that 4 hour up, it's in a really bad spot. And if you're going to pull the 4 hour up, you do it by creating a hold level and recovering the trend on the 1 hour. So it's all kind of one time frame just blends into another. Right. I might go and do something else. Chill on the couch for a bit. Wait for this thing to make a bit of a move out of this area. And yeah, thanks for watching. 28 likes. If you haven't hit the like button, hit the like button. Do you incorporate any AI agents with your trading? No. Not after not after looking at how many of them lost. Yeah. The problem is that it's actually a great example. They are trading based off what they have been trained, and what they've been trained on is the information that's out there for you to be trained on. The, if that's an example of a I was about to say person, AI, a system. If that's an example of a system that's been trained on everything that's out there and doesn't have emotional issues to cloud them like a lot of people do, then they're losing. Wow. That just really, really, really shows how bad the education is. But, you know, yeah. Anyway, we don't have to worry about AI unless we teach it to be good. So, fun times. Big tin hat conspiracy. Maybe everything that they put on the internet to teach you is wrong because the people who put it out there want to win, and someone has to win. For someone to win, someone has to lose. So yeah, tin hat. Think about that one for a while. All right, I'm gonna go and not drink, but gonna go watch TV or something. We'll catch you in the Discord and stuff later. Right. Bye bye. And make sure you throw timestamps and anything else in the comments. I think if you put stuff in the comments after a live stream, it somehow helps. I think. I don't know. The subscriber count's going up, so that's pretty cool. And there's heaps of new faces appearing in the Discord, so that's really cool. And yep, the anti-tumbleweed, the anti-tumbleweed project is working. All right. Bye bye.